All right, here we go. Here we are. Good morning, everyone. Here we are with
Good,
Anastasiia. How's it going, Anastasiia?
good morning, everyone. Amazing. Happy to be here in the morning as well. And I think the market is moving a lot. So we're going to have some interesting things to talk about today. How are you?
Yeah, definitely. We have that USD weakness coming in again. So very interesting. Very interesting. I remember, I looked at your show last week. And you were talking about. So I was actually, short USD on a lot of different pairs, and I was looking at your show, and you're like, oh, there's nothing bearish about the USD. It's just super bullish. I'm like, oh no, no. I hope she's not right. And then I get stopped out on all day. I'm like, wow, she was really right. But I think maybe looking at the market right now, maybe we can both be right, because
Sure.
it kind of feels like it's the market structure on the dollar currency index is it's shaping up to be different than what we had last week. So what it's awesome to have you on here earlier in the day, because I know that you're more active in trading during this time. So it's going to be really cool for you to have your own segment and to be trading, to maybe take a few positions live and have people, ask you questions on the way you're trading. Is there anything you're looking at today?
Yeah, I am actually looking for the dollar pairs as well because we had really interesting things happening over the weekend, which essentially sent dollar pairs where I was looking for. Not gonna say it was easy to catch it because I got stopped out on the way several times until it actually finally dropped on that Trump's tariffs. So it definitely didn't make it easy last week. I'm talking about pound and euro specifically, where I was looking for the short already last week. We talked about it on the call with Victor as well and Alex. So, but it's been until the end of the week. It's been quite ranging, and only after the tariffs, the price essentially went where I was expecting it to go. But now, as we recovered, we also have interesting thing coming today because, well, talking about tariffs, right? I really love talking about fundamentals because essentially that's where I'll find my edge to the market. Today is the fifth, which is actually decision day for the tariffs for the China. And as we know, Trump, he perhaps can pull it off still or extend it in the future still. So depending on what he's going to do until 12 p.m. Eastern Standard Time, which is going to be in the evening our time, so we have some time until then, but it's still can affect the price a lot. Because
Why? Yeah,
yeah.
definitely. I mean, tariffs are definitely the thing that is, everyone talking about it, and it seems like that's the thing that's moving the markets right now. Why is the dollar dropping right now? Because it's got to the market right now. It's open up the charts, and I see some heavy volatility on the dollar pairs. Is there anything going on? Is there anything we should know about here?
Well, we had tariffs, right? This is what's sent our dollar to the upside, and this is why the dollar opened with a huge gap on Monday, liquidating a lot of people already. I saw like the cryptocurrency market really tanked as well. And then essentially the tariffs were postponed. So Trump enforced the tariffs over the weekend for China, for Canada, and for Mexico. And then after the conversation, Canadian and Mexican tariffs were prolonged, postponed for now. And this was the reason for the entire correction back to the downside on the dollar index. Which proves the point we talked about that with Alex already 2 weeks ago on the stream, is that in my personal opinion, this Trump's tariffs are used more in a way of manipulating their political alliance in the way that he wants it, rather than actually enforcing the tariffs and getting the monetary benefits from it for the US economy. I think he's using it more as a manipulation perspective rather than actually enforcing, the financial aspects from it. Because other than that, he wouldn't be postponing the tariffs for the next 30 days after one conversation, right? It means that they came to a certain conclusion, which I think was in the interest of Trump. So now we have the correction, and I'm expecting the US dollar to continue to drop. I don't think I can pull up my chart. Can you perhaps
if you share it, then I will. There it is.
Yeah, there it is.
Can add it. Yeah, I would love to hear more on expanding on that, and expanding on that. Your chart is very blurry.
For me, it's yeah, I don't know why.
We use
Let me try stop sharing and share it again, and maybe perhaps
no. I mean, I would be very interesting to hear, because then last time I looked at your analysis, you said, you know, the dollar is looking very bullish, and that caused me to get stopped out on my dollar shorts. So you would definitely ride on that. But now I'm looking at the dollar; it's kind of breaking down. I'm looking at euro. It's the same. It's the same with the charts. That's weird. Maybe maybe you have to like I don't know. It's trading me, right?
Yeah, it's just trading. It's up. It's always. Well,
okay.
Yeah, I don't know. For me, it's in a high resolution. Really weird. I don't think
Well,
I
let
can.
me know, guys, if it's blurry or what it looks like. I will see. No, it looks like quite blurry when I'm looking at the live stream. Maybe you can like close and open the trading view window again. See if that works.
While we are waiting for this trading queue to load, what I'm expecting is the US dollar to continue dropping, unless, of course, we're going to have something again with the tariffs, and perhaps they are not going to be postponed, or Trump, they're going to reinforce the tariffs again for Europe, because he's still talking about this, right? The moment he enforced tariffs for Mexico, Canada, and China, he said, hey, Europe, tariffs are still coming for you as well. So, you know, don't be happy for a moment being until actually it comes. So I think he's actually looking forward to enforce more of those around the world, which puts US in a very interesting position for quite a long period of time, because this alliance goes against the contracts that they like. The tariffs go against the alliance and the contract that they had before, also within their cooperation of Mexico, Canada, and US, and also around the world, right? So it's not 100% legal, but we know how Trump operates, so it's not something that bothers him much, I would say. But depending on what he's going to be doing with it forward, perhaps we can see again the push on the US dollar. But for the moment being, until the tariffs were postponed and the US dollar declined back to the downside, now that works. Fantastic. Here we go. So this is our US dollar index. TX, I'm using the futures. I find the information a little bit more relative, but it's pretty much similar. So what I'm looking for here is that we had the whole accumulation here for quite a while, right? It's been lasting already from the beginning of February. And then this was the tariffs implementation. So this we opened on Monday with information that tariffs were implemented. And then the whole decline was because tariffs were, after all, postponed. Now, while the tariffs are postponed and the new ones are not coming, I'm expecting the continuation of the same movement on the DXY, again, unless something else is going to happen, but that's not something we have, insight in. So for the current moment, being with the information that we have, I'm expecting the continuation to the downside. Now, first of all, because of the macro perspective, right? Because of the tariffs. Now, secondly, because we broke this whole accumulation zone. So the gray zone that I have marked up, I would even move it a little bit slightly here. So from somewhere 108.03 to 107.7 on the US dollar index, this was a quite important zone for the US dollar, because we had accumulation here every single time when the price came back to the zone. So every time we reach this zone, the price tops and accumulates here the volume. So it comes already from the beginning, the end of December 2024, and we see we had the beautiful reaction here. Then we came again the consolidation, again the reaction, and again the consolidation, again the reaction to the upside, and right now we are below the zone. So until we are below the zone on 107.7, 108.03, I would expect the continuation to the downside. However, again, we had quite a big drop. If we zoom in slightly, because that was 2-hour time frame, we had another consolidation here, a small one. yesterday in the end of the day, and today in the morning continued. So we have this consolidation which aligns with the previous range. So my current expectation is something like this. So I would say,
I would like that.
yeah, I would like to see this on the US dollar. And that's also why I am looking for their sell on the AUD USD, one of the reasons. Because I always look
Nice.
at that.
I am looking at, I'm actually looking at ADUSD as well. So that's very, very, wait, you're looking at a sell on ADUSD.
We're looking for a buy.
You're looking for buy on AD. Are you looking for a buy on ADUSD?
I'm looking for a sell.
No. Why? Man, you're always like you're always counter trading me in all these live streams. You're always counter trading me, but the thing is, a lot of times you're actually right. So
maybe I'm wrong, right? It's just my point of
yeah, but
view
so far you're not wrong. So far you have not been wrong on a single idea where you're counter trading me, which makes me kind of think that I need to pay more attention to your analysis. But because to me, ADUZ looks like a beautiful, beautiful long position. But yeah, let's see how it goes. It's going to be very interesting to see which one of us has right here. You're up like you're definitely like 3-0 to you at this point anyway.
No, so why am I looking for a sell? Because I had the buy yesterday and AUD USD here after we broke this whole consolidation to the upside. So I had the small pullback towards the previous zone of accumulation and a buy, but my buy had a target at this consolidation back. So I'm trading from volume accumulation to volume accumulation majority of the time, and then I have some twists and some special things that I'm going to be talking about, as well on our streams, to help me to determine either this is a time to sell or buy from the range, or perhaps I should skip this one. But we reach this volume and this consolidation, as we see from the perspective of the volume profile, this was a next high volume node. So we have this one and we had this one, but this is quite far below already. And right now we literally are right at the other high volume node. Beside this, if I'm gonna just hide all the drawings and I'm gonna just leave my indicators, this is the next volume as well. This is a point of control of the week, the dynamic one, which is continuously forming together with the price liquidity, and the price just reached it as well right here. So this is the zone. I was looking for the sell between 62,843 and 62,940. And well, I just entered before the stream for a sell for next approximately 30 pips down. Are you looking for a buy already from the current moment, or are you looking for something to happen before?
Well, this is interesting because you're looking at short, but you're looking at you're looking at the markets from a completely, of course, different perspective that I'm looking at, because I'm looking at AUD/USD and my idea would be long and I'm looking for a target that is like 400 to 500 pips to the upside, and I'm looking to hold this for perhaps several months as a swing trader. So looking at your idea, actually, if your idea turns out to be correct, then that would mean I get filled on my long position. So it's interesting that we have these different perspectives and we view the markets from different lens basically. And so it's a good lesson for people watching. When one person says I'm going to short here, that might also be a good long opportunity for someone else looking at another system.
Yeah, exactly, for sure. No, I'm looking for a long afterwards. So I completely agree with you on that one. So we are not against each other this time, which is good. Are you sure about the next months? Because what are you thinking about the Trump's tariffs, if they're going to still be reinforced after 30 days?
Well, yeah, it's a good question. So I'm strictly from a technical point of view. I'm looking at this from a technical macro point of view, and I'm not really putting too much emphasis on the fundamentals here. And what I do see from a technical point of view, from more of a cycle analysis point of view, is all of these pairs trading against USD is either going to put in a bottom here, or they're going to be putting in a bottom is slightly lower. So what I'm doing is I'm building positions in this area. If I get stopped out, I'll wait and I will build positions lower. But if I build positions here and I see confirmation, I will be adding to these positions. And you know, going back to what happened last time Trump was elected, we did see a surge in the dollar, but you know, leading into the rest of the year and into next year, the dollar actually did top out. So we are seeing, I believe, the market. I mean, the dollar is not going to rise forever. You know, even with the tariffs, the dollar is just not going to go straight up in a line straight up forever. We are going to see a correction, and we're most likely going to see a correction with or without the tariffs, because there is this thing psychologically with humans that once something is accepted as a new norm, then we can kind of return to the way the cycle was previously, because now the tariffs are fresh. It's a threat, but at some point people are going to see the tariffs as the new normal, and the market will return to its cyclical nature, you know. And that's the cycles that I'm looking to play out.
Yeah, that is a really interesting point, because sometimes people are looking at the macro, you know, and especially the new traders who never had experience in it. They're like, why is the price not reacting? Well, like you said, it's because the market has already accepted it. People already know that it happened. It wasn't so bad as they thought it would be, you know, in the vast majority of the cases. And they're like, okay, you know, life moves on, and the trading and the market moves on. So that's a really important point as well for people to understand.
Yeah, the idea of being, you know, like Henry says here, the you know, being priced in. And also I think it's important to remember that what's happening right now in the market is not because of what, you know, the price that we see now is not because of what's happening right now. It's mostly about what people think are going to happen in the next months, or you know, 6 months down the line. So the fact that the USD is dropping now is because people are anticipating what will happen, you know, in the future. But I think the best the best way to trade like I'm trading is obviously to have, you know, one ear to the ground when it comes to fundamentals and the macro view. But really there's two worlds in trading. You can really be, you know, strictly technical or strictly fundamental, or a mix between the two. But if you zoom out, you look at the weekly, and you try to look at the markets from a cycle point of view, then these news of tariffs and all of that doesn't really it becomes less important, because then what you see is you see the human psychology. Like, we're trading at the same level that we're trading at now because of tariffs that we were trading at another time because of something else. So it's just the same type of price movement, but different reasons. And the market will always find the reason to go up. They will always find the reason to go down. But our human psychology is going to remain the same.
Very interesting point of view. But yeah, I completely agree with you. It's like, you know, a lot of people asking me, why are you looking at the macro news like within the day, you know, like when their new jobless claims have been released, PMI, CPIs, and so on and so on. I mean, I look at it just to stay informed and to know what's going on and the direction, you know, that the economy is heading. But it just plays along with technical analysis if you look at that from the perspective, you know. Obviously, if you zoom in and you look for the 5-minute time frame, 3-minute time frame, you're going to have a lot of volatility weeks, and it's perhaps going to be messy. But if you zoom in, like you said, you can find a lot of correlation between, you know, the actual technical analysis, and that it is just the news are just the fuel for the market to reach the levels where it's supposed to reach anyway.
So and also, I think, you know, I definitely like I'm not saying that fundamental analysis is bad. I think fundamental analysis is superior in a sense to technical analysis, but it's also much more complicated. Like, you have to, I mean, learning technical analysis, knowing what an uptrend is much more simpler than understanding how the Federal Reserve works, what monetary policy is, you know, the credit cycle, and what all of these economic news releases mean, and what they mean for the economy and for price. I think fundamental analysis is definitely superior way of looking at the markets. But you got to be ready to really do your research and spend many hours looking at at the news and everything. But if you're watching this and you're thinking, should I go with technical analysis? Should I go with fundamental analysis? Do both. Like, learn both and see what you enjoy and what you like. I really like technical analysis, but I also like understanding why price moves. Like, not only from where to when, or from where to where. I guess that's the right way. But I also want to know, like, why is price moving? And I think fundamental analysis is a good way of answering that why.
Yeah, I agree with you. So what are the levels you're looking for to buy AUD USD?
Okay, so I'll open up my screen here, just quickly show you what I'm looking at. So this is AD USD, and we can go out and we can look at the weekly. So from a weekly perspective, I'm looking at first this zone. So I use, when I'm looking at the high time frames, I use a particular area within the fib that I like to call the reload zone, but it's simply, let me share here. So it's simply the area between the 0.618 and the 0.786. And most of the time, when you have high time frame moves, when you have moves hitting a high time frame level, usually you see that price consolidates within the reload zone. And here you have a great example of that. On the 0.702, you have most of the bounces. You have one back here in 2022, and then you have this one in 2023, and now 2025 we are hitting that level again, right inside the reload zone of this big move. And it's a level where AUD/USD does not like to trade below very, very often, unless here in during the COVID times. And if we do drop, then we'll simply find a level lower. But I'm basically looking for a move from this area, and I want to see the same principle play out on this move to the downside. So what I like with AUD/USD is it's a very strong move to the downside. You can see that it's almost no bullish weekly candles. It's just red candles almost all the way down, almost like what you had here. And I'm looking for a move back up into the same area, the reload zone, but reverse. So putting the fib from that high, from that high down to this low, puts the reload zone in here. So I'm looking for a move from the high time frame reload zone up into this reload zone, and that would give us about a 400 or 500 pip move. And from a technical point of view, what I'm seeing right now is signs of a potential potential accumulation here. So what we have is a top, a move down, accumulation. We have equal highs, equal lows. Now this is, I would view this wick as almost a anomaly. And we also have, the trend line. We actually did respect the trend line here on the daily candle close, and we're seeing some strength coming in here in the market. And then if you go into lower time frames, what I talked about is if you short here, then that means price comes down to your TP around this area, which also gives us a break and retest. And what's interesting about this is your TP is right inside the reload zone right here, which also aligns with the high time frame reload zone and everything. So that to me is the perfect entry on a long on AUD/USD. So what I'm going to do is I will wait for a reaction inside this level, wait for a bullish reaction inside this level, and then I can even tighten my stops. And I'm going to open, small positions here. And once we have a breakout like this, then I will be, doubling that position, and I will keep adding to this position the more price goes up. And that's basically it.
I really love it. I just was looking at the perspective of the volume, and it actually perfectly makes sense what you explained as well. My brain works in a little different way, or like I explained the same things that you explain, to myself in a different way. But it definitely makes sense. Can I ask you, what is your average stop loss? If you trade from the daily perspective, 4-hour perspective, weekly perspective, where do you place your stop loss?
Well, so my stop loss can be 50 to 100 pips.
Okay, so it's mathematically essentially.
Yeah, so that is the initial stop loss. So you see the stop loss on my initial position would be entry here, and then the stop loss would be down here. So now we're talking about a stop loss that is about 130 pips. But if we have confirmation, like maybe we move down here, I can add a little bit on the way down, and then perhaps we move like this. Now I will double the position here, and I will be moving the stop loss here. And if we have a move like this, I'll be adding to the position, and I'll move my stops here. So usually what I'll see is the initial risk to reward would be around 3, but then adding to that position, it usually becomes a risk to reward of around 6 with that type of stop loss. So the stop loss is very wide in the beginning to accommodate for potential fluctuations within what I believe is the accumulation range. But then when there's a break above or out of the accumulation range, that confirms that the move is now happening, and I can start tightening that risk management, basically.
That makes sense. That makes sense. I really love what you're saying about the risk to reward, as well, because that just is important for a lot of new traders as well, to understand that initial risk to reward isn't necessarily the outcome, so you can play with it around and you can maximize the potential. And this is something that I needed to learn recently. Just like a half a year ago, I started to adding up to my profitable positions, and I must say that it improves the final outcome of one successful trade a lot. And as we all know, losses always happen. It always takes place, but it's about how we handle losses, how we can minimize the impact of this losing trades, and how we can maximize the potential and the profit we can get from every single positive trade. And I think this is what separates, winning traders from losing traders as well. So I really love it.
And I think also it's important to, usually when you come into trading and you start learning about the risk to reward and the win rate and the relationship between the two, you usually start thinking okay, I'm never going to take a trade that is below 2R. But it doesn't really matter about the risk to reward of an individual trade. What you have to do is you have to look at your average risk to reward of all your trades, because I might see a trade where I see, for example, one level here and one level here, and I see a break and retest with a very good invalidation level and a very good take profit target. But taking this trade means that it would be a 1.5 risk to reward, but it looks highly probable. So I look at this and I say it's very highly probable that this empty space between that level and that level will be filled if the move starts, but I'm not going to take the trade unless it's 2R. And I feel that's the wrong way of looking at it. You should instead look at what do you feel is the probability of this individual trade, and then what's your risk to reward of all your trades combined. Because some people trade based on risk to reward, and I did that as well, but I instead think it's much easier to use trade price. Just trade price action and what you see, and then determine your risk to reward of all those trades. It's Henry says here also, because we've been looking at USD CAD, and this is a position that I got I didn't enter this one, but this is also the same type of trade. So I'm going to wait for the daily candle to close here, and I'm going to be having to move down that level a little bit because I need to adjust it to the new. So if the daily candle kind of breaks down here, that confirms this trade as well. And this is sort of like a cycle play as well. You can see that you have a level up here that's been tested in 2016 and then 2020, and now we're testing it 5 years later. And it's a level that USD CAD very seldom does go above that level. When USD CAD goes above this level, you can be sure that there is a strong possibility of a move lower. And the same thing goes here. Adding that reload zone, and I'm waiting for price to retrace that move back down. And it's basically it's the USD weakness that I'm playing here. So I might be right, I might be wrong, but hopefully that USD weakness is going to come in here and continue. But Trump said that is going to delay the tariffs on at least Canada for a month, and I believe Mexico as well. So I don't know, if a month goes by and he actually implements the tariffs, maybe USD strength is going to come back. But maybe this move can play out in 1 month. It took from that low to that high. It took it actually took 133 days. Okay, that's
you said, perhaps during this month, people are already gonna find peace with the idea of the tariffs. And I believe that with Trump, a lot of things are gonna happen during this month as well, and we're gonna hear their conversations between Mexico and Canada and US. So perhaps that's actually gonna force this month is gonna push the dollar to the downside, and then after a month we're not gonna have such a same effect as we had this week as a reaction on tariffs, because
I am.
it's not going to be new, like you said.
The problem here is just one tweet can absolutely just destroy the whole market, and I feel that it's definitely a possibility in this market, and definitely a danger that we have to. But I mean, we can't really foresee that. I mean, I think the biggest danger is for that to happen over the weekend, so that we have another weekend gap. I mean, I've never seen gaps like what we had on Monday. Well, I have seen it, but it was many years ago. And if we look at Euro CHF, I believe. Yeah, well, I don't even think we had gaps like this. Maybe during COVID, maybe because of the COVID crash.
I think it depends on which asset, but yeah.
Yeah, but on Euro CHF here, I got I had a gap down, a 63 gap down, but I got stopped out on slippage. So price was 120 pips above my stop loss, and I still got stopped out.
Yeah, the slippage was crazy. It was massive.
And that's a risk, So if not even a 100 pip stop loss can save you, then nothing can. And I'm lucky that I had a 100 pip stop loss. If I had a 10 pip stop loss, I would have that position would have been 4 or 5 times bigger of a loss than what it should have been, because of the the slippage and the nature of gaps. So I think one of the things that we really need to be careful about with Trump is weekend risk and weekend gaps. And as a swing trader, it's not that big of a deal. But if this happens a couple of times in a year, then that becomes a problem, definitely.
When Trump took the presidential office, I was posting this thing as well, that at right now there will be, in my personal opinion, there will be a lot of chances to make quick big money, but it's going to be equally possible to lose money really quickly. So the swing trading approach, whatever it is, it can be oil, it can be currency pairs, it can be stocks, but whatever it is, the swing trading approach I think is the safest with Trump right now. And obviously, looking at what he's saying, because that's also gives a lot of opportunities, right? If you play it right. So, but nonetheless, that swing trading can save a lot of accounts this year, instead of trying to catch the 5-minute, 15-minute move scalps, because last week on Euro USD AUG, you just proved it. There was a clear direction, we talked about this, because there was a clear direction to the downside, but to catch this on a smaller time frame was almost impossible. There was such a high volatility during this accumulation zone, just waiting for the tariffs to be implemented as well in the beginning of February, that it was almost impossible. Whether it's with a swing trading approach, you can actually take advantage of this kind of moves. Or you can wait a little bit, but it also requires to be patient. I remember when I was just starting trading, for me, swing trading was impossible. If I would leave a trade overnight, I would wake up in the middle of the night, and the first thing I would do, I would catch my phone and I would be like, okay, where's my trade doing? And then at 7 in the morning, I would be like, okay, what is it doing now? And oh my God, no, it's in loss. So, oh wow, it is in profit, and it was impossible just mentally to hold the pressure of having trades running overnight. So I think it's also needs some training and some practice, especially for people who are just starting trading, who just come into this industry, to be able to have a peace with the running trades overall. Because again, if it's in profit and if it's a swing trade and you have the potential of 200, 300 pips, somewhere around the 100 pips, there is a chance that the person will be like, okay, it's 100 pips already. I don't want it to reverse. I'm going to close it. And then it goes further and the FOMO kicks in and they re-enter in the losses. And I remember how it was, so, but it is a really good approach. And I think it's really worth training to get this patience in, to be able to hold this moves, overall.
Yeah, I do feel it's an important, personality trait. You have to think about, who you are as a person. Are you a lot of people say they're not patient, and I would say that I'm not. I am patient, but I'm not super patient. I'm definitely not patient when I'm scalping. I when I'm on the lower time frames, I want to get out of a position as quickly as possible, But when I'm swing trading, I can hold a position for weeks or even months without any problems at all. But it's like, I think it's that idea of, are you able to take quick decisions? Are you able to be able to make impulsive, quick decisions? Are you able to make good decisions in a stressful situation? And I would say I'm really not, that type of person. I would like to have a more peace and quiet and calm when I'm trading, and like thinking long term and thinking more of a slow approach. I think there's different types of patience. I know Alex, for example, he can't hold a position overnight. Like, he can't go to bed with a position open. So it's different personalities, like you have to I think that's a very important to, when you're trying to find out who you are in trading.
Yeah, for sure. I agree
want
with
your
that.
can we I want your views on Euro USD. What are you thinking on that one?
Yeah, so depends from the which perspective. I think I'm still sharing my screen.
Let me open it.
Yeah, if you can, thank you. You see, that was my pain last week, and I had like this 2 positions on euro and on pound as well, until it actually gave down. Nonetheless, where I am right now, again, it depends from which perspective we are looking at it. So on my 1 hour, 30-minute perspective, we are in the zone where there can be a reversal to the downside. And the reason for this being, I didn't enter the sell yet. I liked AUD more than EU at this point, because also EU, we had the all consolidation here, where there's one big volume was at 03882. There was one big volume zone. Now the second one is from 04200 to 04300. So if I look at my volume profile, this one, we have the high volume node exactly in this space. So I'm looking at something like this, potentially a short right now for perhaps half of a day or the entire Wednesday. So we just reached it. We see that the price has difficulties going down. Now, the problem with that, and why I didn't take the sell, is because right below we had another volume, and because we didn't reach my level that I would like it to reach. Within the day trading, I would like to see it's this perfect entry as possible to cut my stop loss as much as possible as well. So in this case, I'm still waiting maybe a little bit higher and then the sell. Now, if we look for the higher perspective from, for example, 4 hours as well, for our perspective, until we are below 05100, 05200, I would be bearish mainly on the EU. Now, if we break through this is where I think there would be a long potential to go for hundreds of pips from there. So if you get this break and retest of this volume zone, which is again 05100, 05650, then I would be aiming from 300 to 500 pips to the upside on EU. But for current moment being, until we are below these volumes, I'm seeing the bearish potential still. And again, I do think that we're going to have some pullback to the downside before the next right to the upside on this one. So
yeah, I'm 100% with you on that. I think we definitely agree on that. I do, however, feel like I kind of want to like start building a position, but that is not really what I should be doing. I mean, if we get above that 1.05, then that's the level where I feel it's kind of confirming that we want to see a move to the upside, and I'm absolute with you with seeing a big move if that happens. So I guess the best course of action would be, at least from my point of view, to wait for that to happen, really, which is like, it's difficult because I have that feeling that I really want to enter Euro USD to the upside, which is, it's a good reason not to enter. When you feel like you really want to enter a position, maybe you're a little bit, you're gotta be taking a step back and think about that decision a little bit more.
Yeah, so I have the zone here, And this is something that comes already from the previous low. There was also accumulation before we had the drive to the upside, and we had the accumulation to the downside. And this is a zone that is now holding the price. So like you said, I would be waiting until we get above 0.55, 0.56. And then it must be looking really good, because first of all, we're going to be a much higher than the previous high, which is essentially the breaker structure. And it's one of the reasons to start seeing the potential of the trend shift in the long term. Now, secondly, as I trade volume, I want to see some kind of support from the order flow perspective. So I want to see the price breaking above the previous zone of sellers. Now, if we had accumulation here and the price appeared to be lower than that, my assumption by my logic is that we had a lot of sellers here, big sellers, institutional sellers, who were accumulating the positions before the price pushed to the downside. Now, most likely, they're not going to necessarily want to see the price going up really quickly. And this is why we had the move to the upside. And that's where I was looking for the sell for EU. And this is where we had gaps. Now, with the tariffs being postponed, we are coming back to the zone. Now, this previous retest must have already filled a big piece of these orders that were accumulated during this previous consolidation. So what I would be expecting is that this time it must be easier for the price to break through this. And when we are above and we hold above, and by holding, I would mean I'd be waiting for the candle closure on the daily time frame, at least. So if the daily time frame holds above that, then I would be considering accumulating. There are big long positions already for that I'm going to be probably holding for a while as well. But I do like GU much more in this. GU kind of looks similar to AU in this perspective. Now this is 4 hours. And what I see here for GU is this. So it's similar situation. We had accumulation of the volume. This is 4 hours. We have this volume right now where we can potentially see the pullback to the downside from here. And if the price would have the pullback from here down, this is where I think would be really interesting to start looking for the longs on GU. And at least, and this is, well, it's not necessarily from a monthly perspective, but that's 300 pips actually. From 260 to 300 pips to the upside also on GU, I can potentially see here from the 4 hours. So that's also something I'm looking for. But for intraday, I'm still in this AUD USD, which is taking a while, but I do have my all confirmation, so I'm going to be holding that for now. And
I want to before you move on, I want to show GBP USD quickly, because I think we have something very, very similar. So you're looking for pullback into that zone, and if I add my screen here, you see that I have, so this is a GBP USD on the daily, and I've been looking at this channel here, and I've been looking at this possible trend, and we saw that gap down, and GBP USD recovered like I've never seen anything like that. It's just one massive gap down, and then it not only trades back the gap, but it almost like engulfs the whole price action of previous days. So that's quite an insane move. And so we're getting out of this now, this channel, and then you're looking at a move, down to perhaps this level ish. And I think that is also where I would love to start building a position. But I think actually we might not even come down there. I think this is a very strong move. There's a lot of momentum going on here. But yeah, we'll see what happens. But I definitely think a target of 127 or 128 could be a good level for GBP USD. But it also it feels like we're in a market right now where the breakouts are happening with a lot of momentum. As a break and retest trader, it's difficult to get in on those breakouts.
It is quite difficult. Look at gold. I mean, people asking about gold. Like, what can you say? It just continues going up. In this kind of market, it's really difficult to find a good entry point, because it almost doesn't give you any pullbacks anymore. It's just look at that.
We looked at a trade on gold yesterday, and that was on the 1 minute. I kind of wish we had kept this one open, because that would have been we would have been up. Let's see, would be a fun exercise to try. But currently, with current prices, we would be up. Oh, I can't see it. Yeah, we would be up 50 R that one.
Ooh.
Yeah, should have kept that one open. That is that's just insane. Absolutely crazy. Gold is just flying. This is an insane market. Just an insane market. And looking at gold on a daily, ever since it broke this level here in March last year, I mean, you should have just bought that breakout and just hold it, because this is looks like almost Bitcoin. It's just absolutely crazy.
Yeah, you never know, right? In the end of the day, it's like when you always look back, it feels like you should have held it. I also had a buy on gold a couple of weeks ago. So just today in the morning, I was thinking like, man, I should have just held it, It would be just such an easy trading month, really, But you never know. Like it's just the kind of things, of course, you get more lucky, I think, than anything else if you keep holding something that keeps going up.
Yeah, and I also feel like that when everyone is getting very bullish, like everyone talks about gold, everyone want to go long gold, like at some point that you're going to run out of the buyers, you're going to run out of that bullish positivity. And I don't like buying something that everyone else is buying, because eventually everyone has bought and there's no one left to buy. And that's when top happens and top forms. But I don't know, maybe we're early, but looking at the weekly, this is just absolutely crazy. Crazy. Yeah. I'm gonna switch over to your screen, because I'm gonna be leaving in a couple of minutes. So switch over to your screen.
Yeah. So we just talked about the dollar in the beginning of today's stream. So it's slightly trying to go back up. I'm still waiting for this one. Here it started to go back to the upside slightly in the beginning of the London session as well. And now we had this volume here that is holding it. So I think it's also quite interesting. Now, if we look for the dollar index from the perspective, so we are talking about it from higher perspective as well, we see that the price already twice reached 110 point, which was actually the volume here. So if I'm going to zoom in, we will see that we had quite an interesting volume right at 110. There is my the break of the point of control here, and this is specifically where the price reached. Now, what is actually interesting also to see is, I wanted to share it, I'm going to share it a little later today, is how the range is formed. We talked about it before, and this is one of my key market techniques that I use. The breakout of the range, then coming back into the range and trading from the point of control of it. Now, every range has something, almost every range has something what is called a fake out. When the price breaks out from the range, but in a matter of, depending on the time frame, but quite soon it comes back into the range again. So I consider the breakout of the range only when the price breaks for 70 or more % of the size of range to the upside, which means if we look at their US dollar index right now, our size of the range was approximately 1,500 pips, which means the price should have broken outside for approximately 1,000 pips or 900 pips for me to say, okay, the price is definitely out of it now, and we are definitely bullish, long term. Now we are right now approximately only 600, which is 1/3, a little more than 30% of the entire range size. So I feel like we still might have coming back into this area here if what you said is going to come true about the tariffs, and the price is not going to be such a reactive towards the tariffs if they come in 30 days from now after have been postponed. So I'm still waiting for the price to come back. Now, from the lower perspective, where I would start taking also their trades is if the price would break this consolidation. So for their US dollar index, I think it might be quite interesting. And also, if not this index, then we can use it for the longer perspective, buy swings on US dollar pairs, like AU, GU, EU. If you break 105.5, this zone. If we break below it like this, then I think we can have a free drop on US dollar index until 101, 100 and 100.00 levels. So that's something also I'm looking at. And I think it can help a lot. And if it's aligns at the same time when AU and GU breaks back above, I think it's going to have a really beautiful opportunity to buy them all as well, along with the falling US dollar index.
Yeah, I definitely think it's such a clear story and a very clear perspective. Like it's so, and I'm almost a bit worried that it's too obvious. Like because we're looking at the same levels and we're looking at the same ideas here. If the if dollar currency index kind of gets back inside the range and starts trading lower, we're all going to see that but I guess that's what it is. I mean, the simplest idea and the most obvious ideas, I feel like are a lot of times the best ideas.
To be honest with you, I wouldn't say it's the most obvious. I'd bet on majority of people still looking for longs, because if people
maybe they are.
retest, then it's kind of broke to the upside if you don't look for extra confirmation. And I think from perspective of just a technical trader, I think it looks quite long. But if you combine it with tariffs reaction, like you said, and then the GU, AU, perspectives from the high time frame, then I think it creates a clear picture. And then it feels like, okay, it's quite obvious, something must be wrong here. But if you're looking at the dollar index itself, I think it looks more bullish than anything else. And more obviously, even too easy bullish, because it's literally on top of this range. It's a break and retest, and then go to the upside. But it already did once. And this is something I always look at the price action. It already did once, right? It came back here. Now let's go to the daily time frame. It came back here. It had the pullback, right? It had the reaction and move to the upside. And now what I look at is that the price, although it reached the previous highs again, wasn't still able to break through this 110 level, which means here it says quite a lot of sellers, right? Like big positions, which didn't let the price completely to go higher. Now, what is actually also interesting in that on a daily perspective, if I just zoom in slightly, and let's say I just gonna hide it all. Now we see the huge wick, right? As a daily time frame, it's quite a big wick. These wicks are usually formed when it's a liquidity grab than anything else. So my assumption is that we had a lot of sell orders here from institutional traders, from the big position, from the big traders and their positions. And this week was meant to grab and fill their orders before it starts dropping. Now, whether it's for their trader who doesn't look on their zoom out perspective, this can look like simple breakouts, consolidation, retest, and continuation. But if you look at the price action, what the price is telling us, then I think it's more bearish than anything else. If you look at the details.
Yeah, I'm absolutely with you with that. That there's definitely a lot of bearish development on this local move. All right, Anastasiia, I'm going to take a break for an hour, and so you're going to be all on your own for the next hour, and then Victor is going to come in and take over. I'm going to be in the background, so I will see you. I will see you later, guys.
Perfect. Yeah. Right. Jonathan, do I have the ability to still switch my screen to something else?
Well, that's a good question. Can you try to? Is there any possibility of switching? You know what? I'll be in the background. I guess I'll have to be here and help you out. Yeah, let's see. Okay. I'll be here. All right, but I'll be in the background, right?
Yeah, can you maybe switch to my presentation, and then I'm going to ask you one more time to switch it back to the charts. Now, since we are looking at, since we are looking at the consolidation setups that I was talking about, and I said it so many times that I decided this time to bring up my presentation that can help everyone to just understand what is consolidation and why am I looking at it. Can you see my screen like this?
And you can't add that, can you?
I don't think so. I cannot add that, no.
It's just, yeah, it was just black though. I didn't see anything.
But yeah, 1 second.
And no worries.
Yeah, I will have to do it next time.
Okay.
Because the reason it's not working. Nonetheless, let me share another thing.
We'll make sure to have everything up and running.
There we go.
Okay, I'm going to share that.
Yeah, this is something else.
It's very blurry though. That's weird. I don't know why that happens.
Yeah. It's okay.
Oh.
I'll explain on the chart this time, and the next time I will.
Yeah.
I prepared some presentations, so you can.
Well, this is this is stuff that happens. We're live. We're live, and this is just part of the live stream experience. I'm gonna bring your chart up here.
Yeah.
It's blurry again.
Okay, it's just doesn't want to work.
Funny how this works. Technology is both a curse and a blessing at times.
Yeah, let me just reopen it again. But nonetheless, I'm going to explain my perspective on the range formation, because it's one of the most important things. Actually, was always trading already for a good while, and it helped me in so many different instances to just understand the market structure better. So this is what I wanted to talk about it today as well, because majority of the setups that we covered already earlier actually come down to understanding how the range is formed and how the price reacts after the range formation. So I think it's quite interesting, and I've seen a lot of people that despite just completely cleaning the strategy out, not using any extra things, not using extra volumes, not using extra indicators, just looking at the range, were able to build a very profitable, consistent trading system. So I think it is quite interesting also to talk about, and that's why wanted to cover. I think I actually am able to share my presentation now. I see it. Yeah, let's go. Fantastic. Amazing.
Nice. There we go. Okay, I'm gonna be in the background. I'm gonna be listening. Okay, so you just let me know if there's anything.
Thank you, Jonathan. Okay, guys, we are on our own. So again, I prepared something. So because a lot of people don't understand how to work around ranges, and range is quite important, because essentially what is range is something that the price is in for over 70% of the time. So 70% of the time in the market, and it doesn't really matter which market we talk about. It can be currency market, it can be S&P 500 market, right? It can be oil market, it can be gold market. Well, perhaps not from daily perspective, since Trump won the presidential race, but nonetheless, 70% of the time the price consolidates. And try me, when you have a second, just sit down and check how many candles, how much time the price spends inside of consolidation versus how much time the price spends in actual move, which proves 2 points in the end of the day. First of all, we definitely need to know and have the trading edge, which helps us to work around the consolidations. Now, secondly, we need to learn how to be patient, because if we as traders mostly earn money and make our profits when the price moves, and 70% of the time the price consolidates, on the other hand, it means that 70% of the time, majority of the time, we're going to need to be patient, sit down and wait for the opportunity to come, right? Whether it's you're holding the trade during consolidation or you're waiting to take the trade, it all comes down to the same. It comes down to being patient and being able to survive this ranging periods in the market price. So what is flat? I think a lot of you know it, right? But for those of you who are new, right, the price flattening means essentially the inability of it to break above or below the certain structure. And however we explain the structure, it can be support resistance, it can be volumes, it can be anything else, but it comes down to the price is unable to go any further. Secondly, consolidation usually, the reason for it is accumulation of volume by large market participants. Because if you are a big trader and let's say you have a certain deposit and you have a certain task and you need to enter the trade on, let's say, EU for a loan for 1,000 lot sizes. Now, you cannot, however surprising it is, you cannot just send 100 lot sizes and fill in your order. First of all, because it's massively going to affect the market. And that's not something that you can do as a big market participant because it breaks the rules of liquidity. Now, secondly, your order most likely is not going to be filled at all because it's too big of an order to be filled by the average liquidity of the market. So what the price does and what the market participants do with a large capital is that they break down the big orders into the small ones. So if you have 1,000 lot sizes, they will need to break it down into 10, 15, and so on until the full order is filled. Now, if you need to buy approximately at certain level of the price, right? It's like, let's make it easy, 100, you will be essentially holding the price around this level and consolidating the price, consolidate around this level until your order is filled, and your order will be grading at 1.0, 1.01, 1.02, 1.02, 0.99, 0.999, and so on and so on. So the average price of your filled orders will be around 100. So the big market participants break down the big orders into small pieces, and then the other reason why the price consolidates. The third is indecision, where after the big move, the big drive, there are no more buyers, aggressive buyers or sellers left, which means the price needs to stop and start moving sideways until there is new, fresh volume, fresh money comes in the market again to make the price move. Because the money is the fuel for the price. If there is no money, also there is no fuel. So this is a study that was S&P 500, actually quite interesting. We talked about that with Victor last week. And this was a study on S&P 500 where there is approximately 70% of the time the price is inside of the consolidation. And it looks like it moves a lot. But if you look at the range, how much time it takes for the price to consolidate and how much time it takes to make the move, the smallest moves take the longest time, and the biggest moves take the shortest period of time. So the majority of the time, the price isn't going anywhere at all, and it applies to all or almost all the markets, right? Which again is quite interesting because first of all, you need to be patient on one hand as a trader. On the other hand, you need to learn how to take the opportunity when it comes. It requires to be able to make the quick decisions, like Jonathan said earlier, right? Being able to quick decisions under the stress conditions. It requires to be also confident in your trading system and in your risk management. So when the opportunity comes, you have what it takes to use the opportunity and benefit from it. So how does the range look? Because a lot of people, a lot of traders, it's a whole discussion, because if we type in Google the price patterns, there will be hundreds of different price patterns. Now, if you go and look at it honestly and in depth, majority of these price patterns are going to be quite similar, and they're going to come down to the same exact idea, which is the range or flat or consolidation, however you want to call it. So how does the range look like? The option one is the simplest version, which everyone can identify, is when the price, there's like H1 equals H2, more or less, and L1 equals L2, which in other words, simple words mean we have approximately same resistance and approximately same support that the price cannot break. So highs are approximately the same zone, lows are approximately in the same zone, okay? Now, this is also the range, surprisingly, because a lot of people don't consider it the range, but it is a range. In the end of the day, as long as the price consolidates around one simple level, whatever we call it, the median, the middle point of the range, or point of control, or however we turn it, as long as it is consolidating around one line, price line, it is a range. Option 2 is when we have H1 equals H3, L1 equals L3 more or less, meaning the market is not 100% perfect, but more or less they are equal. And H2, L2 can be higher or lower. This is the fake breakout that we talked about before. And in as a short explanation, I also want to teach you how to identify this fake breakouts and to not lose money on that. The third option, even this is a range, is the triangle. Now, if you look at the price patterns, spreadsheets and the cheat sheets, they say this is whatever they call it, the flag, a descending triangle, ascending triangle, the equal triangle, and so on and so on. Now, it comes down to the same exact point, and what I'm trying to explain is that it consolidates around the same price level. Whether it consolidates in its shape of the rectangle, or whether it consolidates in the shape of a triangle, if the price isn't going anywhere, it is ranging. And it can be that lows are equal, so L1 equals L2, L3, L4, and so on, depending on how long the price is inside of this range. Or it can be that H1 equals H2, H3, and the low ones are ascending. It doesn't matter. The point is, if we are still not going anywhere and consolidate around the same price level, it is still the range. So the conclusion,
I'm sorry to jump in and interrupt you, but I just wanted to ask, because right now we're seeing is the same picture. It says flat, consolidation, accumulation. Have you gone through different pictures?
Yeah, I did.
Now it shows the range.
It's really weird today. It didn't.
Yeah, it is.
Work with me today.
Yeah, can you try to see if you can change picture again?
Yeah, let me just.
Yeah, it's working. It's working now, but it was not working.
No.
I think maybe you opened the window or something like that.
No. It was all the way the presentation. I'm gonna quickly repeat it, and I'm gonna repeat fully because I think people heard everything so far.
Yeah. All right. I'm gonna be in the.
Thanks.
I'll be in the background.
Thanks. So again, we have three options, right? We have L1 equals L2, H1 equals H2. This is consolidation. This is the most normal consolidation perspective. Now, this is another one, whether we have the L1 equals L3, L4, and so on, H1 equals H3, H4, and so on, and somewhere the high or the low are completely out of place. This is called the fake breakout, but it's still a range because the price still isn't going anywhere. The next one is, the triangle. Whether it's if you go on the cheat sheets for their price actions, we will see the triangles. It could be ascending triangles, descending triangles, equal triangles, and so on. But the point stands. The price isn't going anywhere, and either the lows are equal or the highs are equal. It still is consolidation. So essentially, the consolidation or the flat or the range, whatever name we give it, is any period, whatever period we see the price moving sideways without a clear direction. And I personally do not trade in any of the ranging situations simply because, coming back to the point, why the price consolidates is because either the big market participants accumulate the positions or there is no volume at all. So in both of these cases, we cannot predict where the price is going to go after the consolidation, the price breaks out of the consolidation. So now, what is really important to know and how to not get caught on the fake breakouts is to understand the price formation, the period of formation of every range. So first of all, the price starts moving sideways, and it creates what is called the first tier support or the first tier resistance. So the normal support and resistance levels where the price is bouncing back from, right? The retail traders start selling on resistances and start buying at support because, well, it looks so obvious, right? If the price consolidates and you have the clear support and resistance, why not go and try to buy from the support and sell from the resistance, right? It looks really obvious, and majority of retail traders just place their stop losses above the high and below the low. Now, what happens afterwards is, after a certain period of time, the price, large market participant, market makers, however we want to call it, push the price beyond the boundaries of the tier 1 support or resistance. And at this point, a lot of traders start expecting the price to continue to go in the direction of the breakout. And this is what's happening with the US dollar index, which I'm going to shift afterwards. We talked about it with Jonathan 15 minutes ago, that it looks so obvious. We had the clear consolidation, we had the perfect support and resistance, and after some time, the price just breaks it upside. So it looks so obvious to be able to buy it and expect the price to go in the direction of the breakout. At the same time, when retail traders start buying, a lot of them also place what is called the stop orders, buy stop order or sell stop order. And when the price makes a breakout, and we don't know yet that it's a fake breakout, majority of the stop orders just get activated. So retail traders get in the trades for long just because the price made a move a little higher than the first tier resistance. But what a surprise, majority of the time after the first breakout of the consolidation, which goes beyond the first tier support or resistance, the price come back into the tier 1 range, right? At the same time, obviously kicking out stop losses of all retail traders who were trying to buy on top of the range. And sometimes, typically, the price also repeats the same move in the opposite direction. So it collecting the stop losses from both sides. And when I see this kind of situation happening, this is my time to say, hey, we already had fake out from both directions, to the upside and to the downside. This is a time when the price is likely to actually break out, finish the range, and start a clear movement. And when I see the fake breakout, at least one already finished and complete, I start looking for the moment for the price to actually exit and start trading in the direction of the actual breakout. Ultimately, after stop losses of the traders been collected, typically from both sides, sometimes from one side, the price really truly breaks out. And the question is, how do you anticipate the fake breakout? How do you stop losing money on the fake breakouts? And how do you know exactly when it's the real time to start trading? So again, the structure is the same, right? We have one tier support resistance. We have the second tier support resistance, which are the quote-unquote fake breakouts, fake outs. And we have something which is called the median. Median is the middle point of the range. And it's a simplified version of, for those of you who are familiar, the volume profile and the point of control of it. Majority of the time, the point of control is at the median of the range. Point of control is the maximum volume inside of the consolidation. This is where the majority of money was invested, and usually it is somewhere in the middle. Because coming back to the first, explanation, if the big market participants accumulate their positions, big positions in this range, then their task is to get the average of certain price. And they are buying below or above it to average the price of all their orders, which in the end of the day comes down to the one big position of hundreds or thousands of lot sizes or contracts. So the median is a level at which, on average, again, the highest number of trades and the majority of the money was invested. So what do you do and what do you not do in the range to not get caught on the fake out? First of all, I do not enter the trade inside of any consolidation. If the price consolidates, for me personally, it is a sign that it is a casino. I have 50% chances that the price is going to break to the upside or to the downside, because unless I'm the one who is accumulating the big position inside of their range, then I have no clue where the price is going to go next. I cannot know this as a trader. I don't have the insight in it. And I can try using the footprint, the volume profile, and like so much other things. But in the end of the day, it comes down to it's still 50-50 chances. So I personally prefer to not trade inside of the range at all. I also do not place stop losses in obvious zones. every retail trader, and I was told the same thing. Majority of us is told that to hide your stop losses above resistances and below support, right? You can let me know in the chat if you were told the same thing, to hide your stop losses above resistances and below support, because, well, the price shouldn't break resistance, the price shouldn't break support. In the fact, right, it can, and majority of the time it does. And majority of the time, if you place your stop loss above resistance or below support, this is exactly where the prices go to catch it first. It can be the week, just 1 week, it hits your stop loss, and then such a, the point of desperateness when you see the price just going into your profit without you, especially when you just started trading, right? Exactly, nowhere to hide it. Well, I'm going to show you how I place my stop losses later, and I hope it can help for some of you, but it really doesn't help to place your stop losses above resistances or below supports. Second, and last thing, right? I am waiting for the actual breakout, and to wait for the actual breakout, I use the 70% or more rule. That should be a 70. Okay, here we go. Now, what is 70% or more rule is the size of consolidation. We measure it, and we take 70% of the size of the consolidation to the upside or to the downside. We wait until the price reaches this level, and usually just statistically based, after the price breaks outside for the 70 or more percent of the size of the range, it does not come back inside of the range anymore. So this information was just collected by myself purely on the statistics. It's just data, it's cold hard data, different markets, measuring different consolidations, and finding this point after which the price usually does not come back inside of the range, which means you are not falling anymore for the fake outs, because if it's there, it's not likely to come back anymore. And the average size of the fake out, on the other hand, is up to 50% of the range. So if your range is 200 pips, then your average fake out will be up until 100 pips. If your range has 50 pips, your average fake out is going to be up until 25 pips. If it's 70% or more, if your range is 100 pips and the breakout is 70 pips, it's most likely the actual direction of the price. Now, how do I take a trade from it? I do not enter the trade when the price comes back to the resistance or support. I take a trade when it comes back to the median or the point of control of the range. The reason for this being is if this median is the line where the majority of the volume was accumulated, majority of the money was invested, it means that price coming back to the range. The reason for this being it grabs the liquidity of the big market participants, fills in the rest of the orders that are there before continuation of the move. Just something that helped me a lot in my trading journey is asking myself a question. Why is the price moving? What's the reason behind the move of the price? And this alone helped me to build a lot of confidence, and also helped me to build my trading system, because instead of looking at the price just purely from the graphical perspective, from the technical perspective, trend lines, channel support resistance lines, whatever it is, I started asking the question, why? And by asking the question, why, and studying the order flow and the volume and how it is distributed in the market, it just helped me to understand, okay, why is it happening? This is why. What can I do about it as a trader? How can I benefit from it? Okay, so I'm waiting for the 70% breakout and then coming back into the median and actually taking the trade. Now I'm gonna share my other screen. Jonathan, if you can help me with that, I'm gonna ask Jonathan, who's backstage from us. But while he's gonna be sharing my chart, I'm going to answer some questions of you guys because I see them in the chat as well. I'm going to see them in the chart. Okay, I'm going to reload it again. This stream today Stream today is just giving me
but
some.
it's not your fault. It's the platform that we're using, obviously. So we're gonna make sure that everything is running smoothly going forward. It's it's a new process that we are new show, new process, and it's live. And this is what happens. This is part of the live
Part of the
streaming experience. There we go. Okay.
There we go. Yeah, that's works now. Perfect. Thank you so much, Jonathan. Thanks a lot. Trump's tariffs are affecting the stream. Funny. They're affecting everything. Trump is everywhere. Might backtest it. Yeah, just go give it a chance. Just backtest it, and come back to the stream. If you have any questions, or perhaps you find that it doesn't work for you, just come back, say, hey, what you said absolutely doesn't work. I'm gonna own up to this. Anastasia's rule: fake out 50%, breakout 70%. I actually love it, Andrea. I love it. Yeah, amazing. Yeah, put your entry where people have their stop losses. Now, what happens a lot, actually, right? What happens a lot is that people place their stop losses and try to, cut them as much as they can. Now, let's have a look at the yesterday's trade that I was taking, and I'm talking about this one, this position here, right? If I'm just gonna clean that out here. We are looking at the consolidation. Now, by what we just talked about earlier, right? Let's have a look at it. We have the first tier consolidation here. We have the first tier support. And if you look at it clearly, you will have, maybe that's not a fake out, but that definitely clearly is. We have the long week and the price comes back inside of the range straight away. Why is my take profit from the sell placed in this area? Well, because essentially I'm looking for the price to come back inside of this consolidation and take then a buy that earlier we talked about with Jonathan. Why? Because consolidation, again, is a volume accumulation. And I can just take a trade from the median of the consolidation. So that's going to be approximately here. That's going to be 62,515 level. For AUD/USD, right? Or the other tool that I'm using for it, I'm going to be taking my volume profile. It's in a paid version of TradingView, but 5%ers are preparing something really interesting for you that you guys are going to absolutely love. But on your TradingView, you can find it on the left side, the fixed range volume profile, and I'm placing it over the entire consolidation, from the first resistance or support that the price found until it actually is still inside the range. And I will find out that in this case, the point of control is a little higher than the median. They're 62,553. And this is, as you can see, specifically my take profit that I'm aiming for with the sell order on AUD/USD. Because if this is the majority of the volume, this is the point of control, this is where the most of the orders were traded, right, they're opened, then this can be also the area where the price can reject from. And this will be the area where I'm going to be aiming to look for buys. So range strategy allows you to not only find the better entry points and survive these fake outs in the market and not fall for them, but it also helps you to trade in the both directions intraday. And by the way, just a side note, that works for every single time frame. It works for the 5-minute time frame. It works for let's say 15-minute time frame, 30-minute time frame, hourly, and even daily time frame. So whatever time frame you backtested, whether you are a scalper, an intraday trader, or swing trader, this is something that you can use as a standalone strategy, but also as their add-on to what you already trade. So my next buy on AUD/USD will be approximately 62,555 to 62,510, 515. And this is where I'm going to be aiming for my short, and also to get a long into this from this afterwards. Now, let's have a look at the other example. If you look at the AUD/USD, and this is a little higher time frame, right? Let's say 30-minute to 1 hour time frame. Let's have a look at this, because this was a perfect example of what we just talked about, the fake outs, how to not get caught on them. Let's have a look. We have the consolidation, right? And we have the first tier resistance for the consolidation, approximately here, and the first tier support. You see that the price came in the same zone multiple times. H1 equals H3, H4, H5, but H2, when the price came back, it's a little lower. So we had a slight fake out to the downside here. Now, what is interesting is we had L1 equals L3, L4, but L2 is lower. Now, H1, H2, H3, everything is lower until the last one. And look what happens. The actual move over the weekend happened to the downside only after the fake out was completed. So some can believe this theory, but some not. But for the market, big market participants, it's not necessarily their profitable idea to let us as retail traders earn a lot of money. So this is one of the reasons the market isn't easy, because you need to anticipate where the big market participants enter their trades, retail traders enter their trades, and rather choose to be trading on the side of the big market participants. So what we see here is the price faked out to the upside. But how could we anticipate it, and how could we survive that? Simply by measuring our consolidation. This is approximately 33 pips. Now, the fake out was for approximately 18 pips, which is less than 70% of the size of the consolidation. So in this case, one of the reasons I wouldn't be going for long is because that was less than 70-75% of the breakout of the consolidation, which means it is likely still being a fake out. Now, how to survive it and where I place my stop losses, I always take the entire volume zone to be able to place a stop loss. So not just the support or resistance, but I take the entire volume zone. And in this case, what we've seen is the volume zone was right here. So if you would place your stop loss, right, behind the whole volume zone afterwards, even if you would be taking a sell, then most likely you wouldn't be stopped out, because the price didn't go outside of the volume zone. The volume zone plays as a strong wall for the price. So this strong wall is supposed to be holding the price, because the whole idea of the volume is that there are orders that are still unfilled. So the price comes back to fill these orders, but it doesn't go much further. So how I place my stop losses, I place my stop losses beyond the volume zones. And now how can we actually take a trade from something like this? The price over the weekend breaks to the downside. In this case, it was a gap. Doesn't matter. It doesn't have to be a gap. But, well, we can agree that it was much more than 70%, right? Because the consolidation was 34 pips. Now the breakout was 120 pips. That's definitely enough for us to say, hey, that's definitely not a fake out. We definitely can take a trade. Where can we take a trade? Again, we can take a median of the consolidation, which in this case would be 17 pips right here, right? And this would be our entry point, or the consolidation point of control. So I place my volume profile over this whole consolidation, and I find that my point of control is exactly in the same zone, a little bit higher. So these two levels are my entry point when the price returns back to the consolidation. So we had the consolidation, we had the breakout to the downside. When the price returns back, this is the wall of orders that's supposed to be holding the price. I enter the trade right here. As we can see, the price goes against us for only 10 pips. And if you place it above the volume, above this whole volume zone, right, it definitely never reaches our stop loss. 10 pips away against us, and maximum the price went 57 pips in our direction. I would be taking a profit somewhere here for the same exact reason, the consolidation. So my trade would look like this, but that's a solid 40 plus pips for a trade just from one trading method. The same exact thing happens here. We have the consolidation that's a little different perspective as well, a time frame. That's already the more of a 5-minute setup, but idea remains exactly the same, right? We have the consolidation here, and we have, look at this. That's a quite interesting thing, right? Because that is a completely different time frame. We have the first tier resistance, and we have the first tier support. L1 equals L3, but L2 is completely out, so that was a fake out. We didn't have the fake out to the upside, and the price exits for more than 100% of the size of consolidation to the upside. When it returns back, I'm looking for a buy. I'm looking for a buy either inside in the median of consolidation, that would be my entry point, or place my volume profile here over this consolidation, and my entry point would be slightly higher. So I can use either of the methods. This zone is my entry zone. The price would go against me for approximately, and this would be my take profit for a sell, by the way, as well, from 15 pips to, let's say, 11 pips max. Well, and the maximum move to the upside, let's say from the worst entry point, is 76. I'm lying. So far already around 100 pips to the upside, where your maximum drawdown would be 15 pips in this exact scenario. And this is just two examples of a time frame of this is this week, right, guys? And I'm not talking about this consolidation. This is another setup that you could have taken. So that's the third setup already. So this is just 1 week, one setup, simple setup, consolidations, nothing else. That's something that, you know, you might want to go and backtest. Okay. Do we have any questions, guys? Do we have any questions about this one? But that's something that is in the base of my trading system. It is really effective. Again, you can add it as a part of the trading system that you are doing, and just to a little bit adjust and twist your stop losses and take profits, for example, or you can use it as a standalone strategy, or you can use it just to survive the fake outs and to not enter your trades too early. Right, so you have different options how to use this information, but nonetheless, when I started using that, it actually helped me a lot. Gives the best chance for the bounce, exactly. BMT says, I think that move was because of the USD fundamental. That move was because of the Trump's tariffs over the weekend. But as we talked about with Jonathan before, you know, if you look at the perspective of the higher time frame for any asset, you will find out something interesting, that fundamentals in a really magical way come together with technicals, and fundamentals just become the fuel which delivers the price to your technical zones you're waiting for. I did not test that. You know, the thing about the fake out is that you don't know that it's a fake out until the price is back. You can, you know, what I build myself as a rule is, how can I avoid fake outs? Okay, if the price goes out of the consolidation for 70% and usually doesn't return, then this can be my rule. You know, how can I enter on the fake out? Well, perhaps you can backtest it and see if you enter approximately on the 50% of the breakout size, but I'm not sure how win rate will be of this strategy. Let's have a look at their USD cut. Let's have a look at the USD cut. Look, regarding the USD cut and also the US dollar index, right? It's quite interesting because look at the USD cut. USD cut is in the perfect consolidation right now. There isn't even the fake out. It was a little bit higher, but it's not so much of a difference. And the bottom as well is still inside of the range. So USD cut essentially is not necessarily the fake out. Now, if you're talking about this consolidation here, look at something what was interesting here. right? This is our USD CAD. Now let's have a look at that. This is our first tier resistance for the consolidation. This is our first tier support of this consolidation. This is our fake out. Look, the price went above it, fake to the upside, fake to the downside, and then we had the move up. Now let's have a look at that. Our average size of the consolidation is 257 pips here, right, on the USD CAD. That was more than 100 pips already. So in theory, I would be taking a buy here. And then obviously, well, I would probably that was quite a big move. So I would definitely move my stop loss already to break even. I did not enter this trade here. That was 112 pips. Move to the upside that you could still get actually if you would be intraday trading on the USD CAD. Because if you place your volume profile over this whole consolidation, your first entry would be right here. Again, I did not take this trade. I'm in AUD USD right now. It's coming back to my entry point. So I'm in AU, but USD CAD I did not touch because I was already in AU and GU. So this was the point of control. This was a perfect entry. And from this point on, if you would just take a buy, you wouldn't have any drawdown and the price would go up for 115 pips. In the worst case scenario, would get break even. In the best case scenario, would have 100 and something pips profit on this one. So despite the fact that the price went down afterwards, you could still get 115 pips. It depends on what perspective you're looking at. I don't think I have the ability to share it because I would need to upload the file. But let's have a look at the other example. Let's have a look at the example of Euro USD. Again, on the different time frames, different different time frames, different perspectives, but it essentially works in the same perspective. There's the same way. Give me 1 second. Here we go. I'm going to turn off the indicators. My indicators are just volumes. Also, just help me to visualize a volume. But let's have a look at this consolidation. What can we see here is another consolidation. The price was stuck here for a while. We have the resistance, we have the support, we had a small fake out to the downside and to the upside. Now, what we see afterwards is the price returns back towards this consolidation. I can enter in the middle of this consolidation. So first, you wait. Step one, you wait for the breakout. It's from the consolidation, at least for 70%. Well, consolidation was 60 pips, so that was definitely much more. So you know that the price is out. When the price is here already, you wait for the price to return inside of the consolidation, and you take a trade at the median. So at the middle point, this is right here, 30 pips, right? So that would be your entry right here. Or at the point of control, which you can use your fixed range volume profile for. So you place here and your volume profile would be lower. So this is a zone wherever you enter from the point of control or from the median, this would be your entry zone. And look what happens, the price comes back, you enter the trade, and it goes to the downside for more than 100 pips as well. In this case, again, my stop loss would go above the whole volume zone, right? So at least above here, because this is where the volume is, this is where my stop loss would go at least, right? So not above these highs, but above the volume. My stop loss is always based, sorry, that was wrong, above the volume zone. Okay. What about the fake outs, breakouts because of the news? Doesn't matter. The strategy performs essentially and in the news and outside of the news doesn't make much difference. You can backtest it, and but from my own backtesting, I look at the news, but I'm not stopping my trades because of the news, because usually if you trade volumes, the news just are used to the fuel and they deliver the price to the next volume zone. This is my AUD USD. It went slightly higher. It's coming back now, so I'm waiting still. It's a little bit around my break even, slightly in a loss, but I am still waiting for the price to go lower. So I'm still holding this AUD USD. If you are not in EU, I would consider the second entry point if the price breaks below this low here. So if we break below this low, let me put that one price point here, 775. So if we are below 775 for AUD USD, I would wait for the pullback, small head and shoulder spot, and I would double up on my position. Because if we break the low, this would be a confirmation for me that, okay, sellers were stronger. They were able to take off the previous buying level. So that's the last buyer level here, the last low. So if you take the last low, the last buyer level, that would be just a confirmation for me that, okay, I'm in a good trade and I'm going to double up on my sell position here. Let's see, maybe I'm going to be completely wrong, but for current moment being, we are still around break even for an entire hour and a half already. But again, I'm an intraday trader, so it doesn't bother me much. Yeah, so the whole volume perspective is basically comes down to the big volume node is the wall, and it's a magnet for the price. So it attracts the price, but it also holds the price. And the low volume is just there is no interest. There was not a lot of orders. And if there were not a lot of orders, that means that it's not a lot of orders left, which means there is nothing to be holding the price, because every time the price faces some kind of wall, the price can't break through it. Asking yourself a question, okay, why is the price stopping there? What makes the price stop? I mean, if I'm just going to draw the line here, it's not going to make the price stop, right? What is going to make the price stop is the order flow, which is in the base of the price formation. So here must be a lot of sell limit orders, which are not letting the price go. And buy market aggressive orders are filling in the sell limits, but as long as there are more sell limits standing here, then buy market orders that are pushing the price up, they're gonna stop the price from moving. Another important thing to know is that the limit orders, sell limit orders, and buy limit orders, they stop the price. And the aggressive orders, market orders, they move the price. So if the price stops, for example, here, that is because of the wall of the limit orders. If the price stops here, it is because of the limit orders. Right, there was a wall of the buy limit orders here, and as long as there are more buy limit orders and sell by market orders, the price will stop. Here, there was also the wall of sell limit orders, but why did the price go up? Well, because the more buy aggressive market orders stepped in, and they were able to fill in all the sell limit orders, and there was nothing left to hold the price. Okay. How many positions do I have for average on week? It depends on the week. If it's non-farm, for example, then less, because I barely trade on Thursday and Friday on the non-farm week. But on average, quite a lot, actually. I take approximately 2 to 3 trades per day. So if not counting the holidays, the non-farm, all of these other things that affect the market, then somewhere around 10 trades per week I take. My target is the next volume zone. Very simple. If you can just grasp the volume ID, you will be able to understand my target placement as well. So I trade from big volume zone to the big volume zone. So let me just show you something. If on AUD USD, right, I have the big volume zone here because this is a consolidation, then I'm going to trade from this volume zone to this volume zone because there is a free space. I'm going to show it on the different, this is an Australian dollar futures. Pretty much the same thing as AUD USD, just the futures instead of the Forex pair. So here is a big volume node, the volume, and here is the next volume, so the consolidation. So this is the zone. Let's mark it up as a zone. This is the zone. and this is a zone. Between these two zones, I have the free space. So this free space will be my trade. So just simply from volume to volume. Benso is asking how many pairs do I trade? Unfortunately, I cannot bring the questions yet to the screen, but we will fix that as well. We'll be able to do that. So Benso is asking how many pairs do I trade? I trade only major currency pairs and oil. Thank you. And oil. So that's GU, EU, AU most of the time, and oil. So about 90% of all my trades are these 4 assets, and another 10 is S&P 500 and gold. That's it. I am not a fan of trading like different kind of assets, different kind of pairs, because I think if you just master 1, 2, 3 assets, there's going to be more than enough for you to be able to be really profitable. Unless you, of course, trade and effectiveness in the market and all those kind of things, that's a completely different strategy. And then, your point of view is research in the market to find a non-effectiveness. But if you're just a trader, normal trader, average trader like me, we trade specific things. And the better you know the asset that you trade, the easier it will be for you to both find good entries and exit points, but also know when it's time to trade, when it's not time to trade, when it's time to, be focused and find your positions, when it's time to stay away. What is a normal price behavior? I love compare it to, this is really example, but I comparing it to the relationship. If you are jumping from one relationship to another with different people, you are not going to likely to learn the character and the specification of the specific person. The same is with the currency pairs, with your trading assets. Imagine that you are in a relationship with them, right? Don't marry your trade. That's completely something else. But imagine that you are in a relationship with your asset that you trade. It means that you need to learn the specification, the behavior, the average volatility, when it makes moves, like when it doesn't make move. When within your strategy, it is the best time and the best moment to enter the trade. By just backtesting this kind of things, you can figure out what are the most profitable hours for you, what are the least profitable hours for you, and eliminate the things that do not work that on the first sight would just make sense. It can be the perfect setup, but within the wrong timing, you're most likely going to get a loss. So I trade only 4 assets 90% of the time, and this allows me to study it, to know what is my trading time, to know when I need to stay away, to know when I need to be focused and add the charts, and also let me live the life, because I know that after a certain hour, my entries just not happen anymore. Because if I enter after the New York session, I know that my win rate is much smaller and I start losing, versus that I enter exactly the same positions, but in the morning during the London session. Yeah, kind of. How do you confirm that the range have enough volume zone? Range is always the volume, and something that really important to remember is that you have never 100% the chance that the price will react. But if on average it reacts with a high probability, that 7 out of 10 times, 6 out of 10 times, 8 out of 10 times, something performs, that's already good enough for you to build a strategy upon it. So I always trade from ranges. The only moment when I don't is when I have the price very close to 2 ranges. So that's a little different from what you are asking. But essentially, if I have the range here, for example, and if I have the range here, and I have almost no space from it, then they have 50-50 chances from which the price is going to react and which direction the price is going to go. So if I don't have that space between the range, then I don't trade from this specific range. But that's the only one of the few moments when I can say, okay, I'll skip this one. specific thing. Okay. BMT is asking also, how do you deal with exhaustion? You know, I remember how I was a beginning trader and I just used to spend 12 hours per day in the front of the charts, more even. From 7:30 in the morning until 11 in the evening, I was staring at the charts. And oh my God, I was trading gold on 1 minute time frame back then. And I felt exhausted in the end of the day. And that was really difficult. Now, what I found useful is backtesting, like I said before, it can really help you to be able to define what is your specific trading time. Because as a trader, you need to remember that our brain has a certain amount of time per day when you can be effectively productive. And the longer time you spend at the chart, the longer time you stare at the screen, the less focus you will have left when your actual good trade comes. So one of the rules that helped me is, first of all, backtest. And this is a step number one. I backtest the previous 6 to 12 months of data, right? And I find that periods of the time during the day when majority of my most profitable trades happen. So I know that, for example, from 8:30 in the morning till 11:30, 11 in the morning Central European time, I add my charts because this is when majority of my entries happen, and they usually bring really good results. Now, after this time, I know that my win rate highly declines, although I use exactly the same strategy. And this is the kind of things that can help you to understand that, okay, this is a time to focus. And after this, this is a time to go and live your life, to also overcome burnout, to overcome exhaustion. The second thing is that if I add my charts at 8:30 in the morning and until 9:30, 10, there is nothing happening, and I see, for example, the price is consolidating, or the price is in between two ranges, or whatever it is by your strategy that tells you that the price is still far away from your good entry point, there is no reason to keep staring at your charts and waiting for something to come that is not going to happen anytime soon. So instead of trying to, stare at the charts and move the market just by seeing it, like brain on it and brain until it moves, just go place some alerts and do your things, live your life, enjoy your life. That also helps you to come back later. Sorry, guys. To come back later when your entry already happened, and to know that, okay, this is a time when I need... when I need to focus. So I know, okay, right now there is no reason for me to be at the charts. I placed my alerts. When alerts trigger, I come back to my chart and say, okay, this is the time I need to focus. By this simple actions that take some time in the beginning to backtest and figure out your timing, but it can save you every single day hours of time and can help you to focus when you need it, not when there is nothing happening. So I would start with backtesting, figuring out your most profitable time spines, and then afterwards to learn how to not sit and wait until your trade happens in front of your chart, but rather learn when it's nothing, to let it go. And remember that you don't need to take trade every single day. Sometimes it can be that 2-3 days there is nothing. Do not force that trade that is not yours. I find that the most profitable way in the markets is to focus on only trades that are truly your trade. When even if it hits stop loss, you can put the heart, with a hand on your heart, say, hey, that was a great trade. Even if it's a loss, it was a good loss because it was within my strategy. It was a right risk management. And by doing that, overall, in the end of the month, in the end of 2 months, 3 months, and the end of the year, you will be a profitable trader. So I hope this helps. For assets, I'm going to remind it simply quickly. It's GU, AU, EU, and oil. Thanks, Jonathan.
All right. Awesome. That was a very, very informative and interesting presentation right there. I think people are probably going to need to go back and watch the replay and really take some take some notes on this. So we're gonna have Victor. Victor will be coming in shortly and taking over. And in the meantime, I'm just gonna take a look at some charts. And yeah.
I'm gonna be watching Victor's stream as well, because I really love how he explains. He goes and the charts with such passion as well. So
yeah, definitely.
So guys, make sure you stay, because Victor is gonna bring also his view at the markets, and it's always really informative and interesting. And again,
awesome. All right, thank you, Anastasiia. See you next week.
Yeah, thank you, Jonathan. See you next week as well.
Awesome. All right. Here we go. Victor is having some audio issues, but I do not have any issues other than my Euro GBP position that is currently under the water, under the surface. Let me see if I can adjust the layout here just a second. Try that. Does that work? Let's see. Oh, that's weird. Well, that has to work for now. If you are experiencing any issues with logging into MetaTrader, that's because you have a new password. So log into the hub, and then you'll go into your program, your account, and then select the new password, because sometimes the passwords are being well, we have reset all the passwords, so you have to go in and get that. And then also you have the live chat, you have the support, but it's quite easy. Just go into the dashboard and get your new password and log in. Okay, so I'm currently long here on Euro GBP, and obviously we have quite a way down to my stop loss. I'm not really worried. I'm not really worried about this position. How long does your average swing trade last for? That's a good question, and I do not have a great answer to that right now. But I can look at, give me a second, and I can go in and I can look at what the last statistic that I had on that. But the statistics here, that's over 300 trades, and during these 300 trades, I have man, it just disappeared. My thoughts just went in and out. Over the course of these 300 trades, I have traded slightly different setups and systems, but my average holding time for the last 300 days over the course of almost 2 years is about 24 hours. It's about 1 day. But if we'll look at swing trades, I mean, we can look at Euro USD trade that we entered here and we closed it down here. That was around, how long did I keep that one open? That was about 15 to 20 days, So yeah, I don't really have a good answer to that. I don't really have the statistics on the specific swing trading trades, but I would say somewhere around 1, 2, 3 days, something like that. We have some really interesting developments here on in the market generally. So USD I'm still short on this on one of my prop firms, which is 5ers and another one. So USD I'm looking to add to this short position right here. And then USD CAD, I'm looking for this to confirm a break as well. Your USD, I'm probably going to be following the idea that Anastasiia shared as well. And you know what? I've started looking at it, but look at this. Man, look at this. If we... Okay, is there a way to remove the wicks? There is. Okay, so let's look at the... No, because the bars are still showing the wicks. I wish we had a... I wish we had a way of looking at only the body. I'm gonna have to look that up. Give me a second. Because I would be very interested to see... Is it... But the Heiken-Ash is not the... This is Heiken-Ash. It's still getting the wicks, you know. And of course, then we have... What about Renko? This is interesting, right? Isn't it? This is such an interesting type of way to... Yeah, I just want to see the body, right? The open and close, not the high and the low. Which would mean we have to look at something else than a OHLC candle. Oh, is the high and the low? No, that's the high and the low. That's not the open and the close. But we might be onto something here. Where do we find... Even possible? No, because that's the range. I mean, we do have... Okay, so we do have the line chart, right? And I like the line with market because it shows the every close. So the line chart is, I guess, closest to what I wanted to see, right? And on the line chart, we can really take a closer look at this, and you can see that only looking at the closing prices, which arguably as a swing trader is the most important price of any price, is the closing price of the daily candle. If we go to the daily chart here and we do focus on the closing price and we look at the line chart, you see how the perspective is completely changing. It is completely changing. We go to the daily, the candlestick. Now we have a double bottom, but on the line chart, then we look at the what I believe is the most important close. We have it right here. And that, to me, looks like a perfect retest of that level. Then add in the candles, perfect retest of that trend line. It's just very, very interesting. All right. Got Victor in the background. See if he can manage to get the sound and everything going. But this is, I really like... I like your USD here. I feel like I should be in a long position here. And we do the same. We switch over to the line chart here on USD CHF. Also gives me a very clean, clear picture, and paints a story of a reversal. However, you can also look at this. That was also quite a clear reversal, but we had the same type of price action here that we have right here, and then that obviously started a massive uptrend, right? So there's a lot of things here that can do differently to change our perspective of the market. What's up, Victor?
Hear me?
I can't hear you. I can hear you now.
Okay, but I can't hear you, so I'm still having some issues. Let me check what is the problem.
Vinicius says, how do you see your USD now? Yeah, well, so looking at your USD, Looking at, strictly from a...
Yes, I can now hear you. You can hear me?
Okay, perfect. Beautiful. Well, I gotta get some lunch. So you'll take over, and I'll be back. I'll be back a little bit later.
Be- Before you go, how is my audio? Because I'm not sure. I just, is it okay?
It's okay. You sound like a robotic a little bit,
Hmm.
but maybe it's just maybe you're just turning into an AI. I'm not saying anything. Maybe that's why you're not hearing me. Can you hear me now?
Yes, I can hear you. Can you hear me?
I can hear you, but it's like it sounds like you're using your phone as a mic or
Yeah.
something.
Yeah. I'm using a different mic. For some
Right.
reason, I'm unable to activate this mic. I'm using the other mic. So to not
Interesting. We had a
lose
lot of
any.
issues with Anastasia's live stream as well. But okay, so what I'm gonna do is just grab some food, and I'll be back once that is done. And by the way, guys, today Alex is gonna be busy, but we're gonna have Dirk coming on later in the live stream after 2, I believe. What time is it? Oh, it's 1. Okay.
Thank you for covering those extra minutes. They felt like an eternity while I was trying to figure things out. And apparently, I haven't solved everything. But well, welcome to my segment, everyone. That was
Yeah,
kind
make
of
sure that
an
never
intro.
happens again. I'm kidding. Okay, see you soon.
See you. Perfect. Let's let me get the. Hopefully, there will not be any. I need to get my screen, of course, on for everyone. Let's see how that goes. How is everyone doing? I'm just coming in. I have been trading, of course, but I haven't been streaming. This is the beginning of my streaming day. All right, let's look at the charts. And I do apologize for the sound if it is subpar, if it is suboptimal. You know, these things happens from time to time, and I hope they don't happen that often. But hey, they happen sometimes. But let's see. We have. I want to adjust something here. Let's see if that's possible with the camera while we start things. All right. So let me know in the chat, guys, everyone. How has your day been going? Have you been able to catch some trades? Is it something? Let me see. We can maybe zoom out a little bit. Yeah, I think that would be nice, right? Just a little bit, so you see a little bit more of my face. How is everyone doing? I haven't. Let me check the chat. Hello, Vinicius. Thank you for saying hi. It looks like I got sick or I'm getting sick. Well, the thing is, I have been having sort of a cold um, in the last couple of days, but nothing too, too fancy. It's just a little bit of a cold, and maybe that's what is visible on my face. I'm not a Filipino, very fond of Filipino community, but I'm not one of them. I don't speak Tagalog. Um, nice. All right, so let's look at the markets. So, all right. Okay, so what do we have? Before we start, let me uh, do a little overview of what we can expect today. Today is the 5th of February. It's 11:45 UTC or GMT. And let me see what we have here in terms of the calendar. All right, so today we have, of course, the ADP non-farm employment, which is a different metric about the labor market, of course. And later on, that's 2:15 my time, which is of course 1:15 GMT, and 3 p.m. or 15 hours, we will have the services PMI. Right, those are the two red folder announcements or news for the US dollar. Need to keep that and keep an eye on that. Tomorrow we have some big news for the pound, which is the interest rate decision. So just to start, it's a very good habit to know, what is the relevant macroeconomic events coming out on your session. That could be your week if you're a swing trader, or your day if you're a day trader, right? So it's always a good advice to start with that. So all right. So let's thank you. Thank you for letting me know. So do you guys have any requests for any pairs that I should look at in particular? Of course, I will be going to the usual euro dollar, pound dollar. We could look at perhaps Bitcoin or gold as well. They have been, especially gold, has been making all-time highs. And I see someone there, Juani, asking for the GJ or the pound yen, a very volatile one. We will surely take a look at it. And as well, Henry looking at euro pound for a long. This is a pair we have talked about a number of times now. I haven't met. I think we mentioned it like maybe 2 weeks ago, maybe 3 weeks ago. Jonathan has been talking about it quite often because it also for him there's a setup there, so we can look for sure. We can take a look at that here as well. So let's look at pound. What do we have? So on the another pound, the euro to start off with, we have the daily time frame. This is the weekly, I mean, but we are in that demand zone. Nothing else. That's a very good question. How do I approach news or manage my trade during high impact news? I will discuss this. Maybe I should say it right away. Right? The way I do it is in my back testing, I did not take into considerations high impact news. So I applied my trading rules the same on before, during, after high impact news, and it didn't matter to me, right? So it was profitable regardless of what time of day it was, regardless if there was a high impact news coming up, or if the trade was on and the high impact hit. I would still, everything would work. Most of the time would work the same. It's the higher volatility that comes with the news only accelerates the process, right? It either goes to my stop loss or my TP more quickly because of that higher, ranges and so on. However, in reality, what the risk we have with high impact, there is a distinct risk, which is this risk of slippage. Normally, when you trade, the risk of slippage is minimal. It's usually not even, you will not get slipped, under typical circumstances. Um, but with high impact news, that risk becomes considerable, meaning your stops will not be, your trades will not be close at your stop loss. If it's very close, if the market gaps, you might get filled 10, 15, even 20, or even more pips beyond your stop loss. And that is an issue for if you are trading with tight stops, as I am, right? My stops can be as low as 2 pips. Not typically, but there can be even 1.8 sometimes. You can imagine what it means. Um, it's unlikely that I'm gonna enter right before the news, but let's say I am, enter before and it goes in my favor a couple of pips, and it comes back around break even before the news comes out, and then it gaps down, let's say 40, 50 pips. That means that I'm going to have, instead of a -1 R, one loss, I would have something in the ranges of 20 times the loss, the size of my intended loss. That's problematic, right? So to accommodate this risk, even though it doesn't affect my strategy, when you don't have slippage, because of slippage, I need to address and manage the risk that we get from those high impact news. So what I do is I execute everything the same. Whenever there is a high impact news coming, like the ones today, I need to assess whether I'm far enough from my stop loss by the time the news comes out, right? About half an hour, 20 minutes, it can be 10 minutes before the high impact news hits. What I would do is how likely, I would ask myself the question, how likely is it that the price can gap beyond my stop loss? That's the question to be asked, right? So if let's say there is, as I mentioned, there is today ADP. I need to have an idea. Okay, ADPs, when they get out, what is the typical reaction in the extreme cases? When it doesn't do anything, it's not important. It's about those extreme cases. It happens maybe once a year, maybe twice a year. What happens when you have an extreme result? Something that surprises the market, something that was unexpected and gaps up or down. And when I have data of that, right, I have a set of a spreadsheet that how I gauge how likely each, what is the extremes that we have been seeing in the last 10, 20 incidents of that news. And based on that, I say, okay, if I am 30 pips away from current prices, right, my stop loss, I mean, and the news is coming out in a couple of minutes, it may or may not be necessary to close that position. In the case of ADP, I wouldn't touch it, right? I would still leave it because if it takes, it's not likely to gap much more. If I'm more than 30 pips, it's unlikely to gap beyond my stop loss, right? So, but if it's NFP or if it's interest rate, I wouldn't dare doing that, right? So what I would do is I would close the position altogether, or I would, well, there are other techniques with hedging that I sometimes apply, but to keep things simple, I would just close the position. It's much better to take that risk off the table and not, get the positive expectancy that I have for that trade, as long as I can avoid having that, all outsized loss that I would have or have a chance at getting. You are number one as a trader. Of course, we are in the business of getting profit. That's what we want. That's the goal. That's the target. But before that, we should think about risk. And managing risk is much more important than getting more profit. Okay, and so you have to, around high impact news, there's a peak in risk, especially if your stop loss is quite near, and you need to act accordingly. You need to accommodate that risk. One of the ways is to just lower the risk either completely, or you could hedge it, or you could, make you could close part of it. It all depends on your setup and your system. The simplest advice would be to close the position right before, not minutes, but maybe 10, 15 minutes, maybe even half an hour, depending on your typical duration of your trade. And you can, look for the, let's say if you're in a long position, you're going to say, well, I'm going to target a supply zone, right, in the next couple of 10, let's say you're 1 hour before the news. I'm going to say, well, I'm going to target the next one in the next 30 minutes, 30, 45 minutes. And then you can get a, great exit, even though it's not your intended TP. At least you get an optimal for the time that you have available for you. That's the way I trade high impact news. All right. So, but it is something, it is an item. It isn't lowering your risk around high impact news is a real thing that every trader should be able to think about, have a plan about, contingency plan around it, and manage actively. Because if you don't, most accounts, it's not a surprise. Most accounts are killed or terminated around high impact news, right? It's a common knowledge in the prop firm industry. Of course, it applies for private accounts as well, but prop firms, there is a peak in the amount of accounts being terminated each NFP event. So don't be a statistic. Make use of this statistic in your advantage, but don't be a number. No problem. No problem. That's why we are here, right? That's why we are here. Okay, so let's look at the, let's see. Thank you for your feedback, Vinicius. We truly appreciate your feedback, and we will definitely take it into account in the coming or the going forward. Thank you, thank you, thank you. Henry says it, don't be a statistic, don't be a sadistic. Very catchy, but so true. Save yourself the pain and just step aside when there's high impact news coming. Unless you have a plan, unless you have data backing you up that tells you that you are taking a calculated risk um, while during the high impact news, the best thing is to just don't be a hero, step aside, close the position, and look for another one when the market, the volatility subsides, things are, price action is as usual. All right, let's look at it at EU. We were I was mentioning we have a weekly demand area. Um, that is because of what we have to the left, right? We have a quasi, and that is an entry order block on the quasi. We didn't get the entry signal on the weekly time frame yet. That could, happen maybe. Who knows? I don't think it's going to happen. Well, maybe it can happen this week if it were to close above this line, above the open of previous week um, price, then that would be a sign. Well, that is in the right template. That's a sign that the buyers have taken control, and that could be considered a line, or not a line, a a signal for if you're only using the weekly time frame. That could be your signal, putting of course your stop loss below that, the lowest point of those two areas, and it should be below this, the structure that you're trading as well. But I don't trade that. But I mean, you could, for sure, build or frame a strategy around that. Let's go to the daily. So the weekly doesn't have anything to tell us other than we are in a demand area. We should see, as each time price comes back to this area, it can happen multiple times before it leaves that area, either from the to the upside or to the down, breaking it and going to the downside. Doesn't matter. This is a demand area, and we can expect price to have these kind of moves each time it comes back to retest it. And the way it gets out of the structure, right? It gets bounced off, uh, uh, gives you some idea, some clue if it's going to hold or not, right? That's one of the secrets basically in order blocks. It's looking at the price action and behavior of price each time it is being retested. We know from a fact that the more times it gets retested, the weaker the structure gets. But also, that's a universal rule, but you can read price action each time it gets to the area. If it's, let's say, if it's a bullish structure, and each time it has a reaction, right? This is one reaction. Actually, we already had one reaction here. You can already see that the reaction comes much later. First time it was at the beginning of that order block, the upper border, right? That's a sign of strength. It wasn't able to pierce that order block by much. The second time around, the order block is weaker. Where does it get the reaction? Much, much lower, actually below the order block, right? Doesn't invalidate it, meaning it is still valid. Buyers will still react to it, but it is not as strong as the first time. This is the first attempt. The second attempt, you can already see that it goes way deeper, meaning it's not as strong. So that is one thing. Where does it start? Where does the buyers coming into the market? Is it how deep were they able to pierce that order block before they start to mount their counter attack? That's one thing. And the other is, if you see this on order blocks, right? Even if they react from the same place, roughly the same place, but we have a reaction that is smaller each time, what would that signal to us? Let's say you have, each time it comes back to the same order block, it seems to have, a smaller reaction. What does that tell you? Tell me in the chat if you think you have an idea of what does that tell you. I know there's a delay of about 20 seconds, so I need to be patient with your responses. Anyone in the chat? Well, of course, no problem. No problem, Vinicius. The question was, what does it mean when each time, right? Each one of these arrows is one retest of that order block, right? The weekly order block we have to the left, that's the shaded, yellowish shaded area we have here. That's the weekly entry order block, okay? And each of these arrows, they symbolize or they indicate a reaction from price of that order block. And what would it? I already gave you guys one indication of a strength, how you can gauge an order block. Is it going to hold or not? Is it strong or not? One of the indications is the place that that price reacts from it in relation to the order block. How deep is it able to pierce the order block before it gets that impulsive move, that reversal? The first one was at the upper border. The second one was beyond its lower border, basically, right? Meaning, which of the two tells us, actually, that's another question. Which of these two is stronger, in your opinion? Let me know in the chat. Is it number one, this reaction, or number two? Which of these two reactions is stronger? Just not looking at the size of the candles, not looking at how many green candles that were produced after or during each movement, but I'm assessing only the place in relative to the size or how much the order block was pierced. Which one do you think tells us that the order block is stronger? And Henry tells it, right? Yes, it's this area. Maybe I should change the color. Let me do that. Let's see if that's let me change that. All right, so which Henry said it correctly. The first one, the first retest is at the beginning of that order block. It tells us that it didn't very quickly. The buyers came in to defend that area that we previously, because of what we have to the left, they created the order block, right, by coming to the market in the past and buying the market. That's why we have an order block there. And the fact that it only takes a little bit of that order block to push price higher speaks of the strength of the order block. The second time around, and Henry is correct, the fact that it's a second retest, that's another thing as well. But the fact that it goes deeper means that the order block is weaker. Okay, that's one thing. Of course, it's the number of trades, number of retests as well. The first retest is typically the strongest. And as you go, the second, third, fourth, etc., it becomes weaker and weaker. Okay, so we get two ways to assess the strength of an order block, right? How many number of times it has been retested already, and at each retest, how deep it was retested. Okay, so that's two characteristics or two ways you can gauge the strength of the order block. The other one is, and that was my question, if we have, let's say we have, this third, fourth, fifth, and sixth reaction from this order block, it doesn't matter what time frame it is. Imagine you have, each time it goes up, right? Each time it goes up, you have a smaller leg that is created. A smaller leg, what does that tell us? What does that tell us? Is that a sign of strength or is the sign of weakness? Right? Anyone in the chat, let me know. Let me know what you think. Is the fact that it is getting, we have one, Grace, thank you, Grace. We have one person, right? You have sign of weakness, Vinicius says as well. Yes, you are right. And the idea is, right, typically on the retail world, maybe not as much as before, but when you come into the market, one group of the retail traders will think, well, it has held not once, twice, but it has held 3, 4, 5, 6 times. It must be telling me that it is very, very strong, because look, how is it possible that it holds that many times and it keeps on reacting? It means that it's going to, it is very strong, that area, right? That demand zone is very strong, and we're going to eventually have an explosion to the upside. It's the opposite, right? The more, I already said that, the more retests we have, the weaker the structure becomes. But also we can read by the buying pressure, if it is it crescendo or is it decreasing, right? When in time, right? If we have something like this, what does that tell us? Well, that's going to be extreme, but let's say we have a crescendo impulsive move each time. Is that weakness or strength? What is it telling us? Instead of decreasing, we have increasing buying power coming to the market. Who dares in the chat to say what this is? Is this strength? Is the market telling us we're having strength? Yes, Harish, you got it right. Yes, that's a sign. So by looking at the size of the reaction, the number of the reaction, and the depth or the degree that it is able to pierce through the order block, you can read price and gauge the strength of the order block. That can help you decide whether this order block is going to hold or is not so likely to hold, right? That is the question when you're trading order blocks. Which one should I be trading? And is it going to hold or not? Not all order blocks are going to hold in time. That's a given, because otherwise price will never go, will only be compressing constantly. And we know that we have breakouts. Prices will go to price discovery all the time, break previous structures, and those structures are, of course, order blocks as well. All right, so All right. Sure. So we let's go back to the analysis. We had a little educational segment right there about order blocks and the strength, how to read them. But let's go to the market analysis. So we have euro dollar. We have the order block being the demand area, where we have the where we would expect price to be bought up by the buyers, right? Because of the weekly order block. That's one thing. However, it hasn't on the weekly time frame locally hasn't shown us that the buyers are taking over yet. They did here. See how we got our engulfing, right? Indicating that the buyers, they did take control from this point on. However, by the fact that they closed below that level, and by that level I mean this level, right? That impulsive move that was created is no longer valid, meaning it was negated, it was canceled out. Okay, so we that signal, if you traded it, it's over. It doesn't it's not there anymore. It's not valid. So we don't have anything valid to on the weekly time frame in any case to conclude that the buyers have come in and we're gonna go higher from now on. It may happen in the future, but we can't use that. Whatever happens in the future, we'll have to wait for that. Right now, we can only trade on what we see on closed candles and not something that might happen in the future. So on the weekly, we don't have anything. On the daily, we did indicate earlier, by earlier I mean yesterday, that we have a daily order block, daily quasi, of which we had a neckline break, and price comes back nicely to one of those two order blocks, entry ones, and then reacts very nicely from it. It didn't give us the outside bar or engulfing to signal any entry or any to use it as a signal, but it did have the same the expected move, which is a reversal from it, right? So maybe on the lower time frame, you could have looked for an entry. There wasn't really an entry, at least not the way I trade. You could say this is an entry, and actually it is, depending on if you're only using this time frame, right? The fact that it came back taps into this order block, right? Taps it on the retest and then shoots up, right? That could be an entry indeed, but in my case, I used multiple time frame and I didn't get that nice entry that I'm looking for, which is okay. I'm already happy able to reprice and knowing where it can trade, and as long as I have that, even if I don't get a signal, it's fine. As long as I'm able to reprice, I know where to enter, how to define my risk, and it's just a matter of time. Maybe not this time, maybe the second time around or the third time around is my time. I get my signal and I can enter. Okay. On the daily time frame, let me go back to, yeah, the lag is too long. Of course, it is long. If the entry needed to be the entry you would get, you want it to be as close as possible to that daily entry order block. You don't want to be getting on or getting into that trade way longer. Besides, on the daily time frame, it hasn't signaled. On the 4 hour, the setup that I mentioned is based on this structure, finishes on that structure, on this structure, and you could have entered either using the upper border of that order block and putting your stop loss below the whole structure, or you can go to the lower time frame and refine that entry for something that makes more sense, or you could just use half or more, a little bit below half of that order block width. It's up to you. You have to find out what is most likely to work in your situation or your type of entry, and either go for the next structure on the same time frame, which would be the H4, or maybe some a high, a previous high, something like so. So on the H4, we do have a quasi, but the quasi doesn't have any valid entry order blocks anymore. Meaning we don't have any structure that can give us a signal. What we need is we need a new structure, new reversal pattern to be formed from local structures, local price action. And we haven't had that yet. That hasn't happened yet. So we'll have to be patient. We'll have to be patient and wait for those quasi to form if you want to be using those quasi. The other thing is we did get some. We did have fresh order blocks here and there, and as I said, that could have been a reason for you to get long. Personally, it didn't trigger me. I didn't have that reaction or that signal coming out. All right. The other thing that I want to mention is that on the daily time frame, we don't have any reason for price to stop here. Okay, we don't. On the higher time frame either. The next structure is a monthly structure on the that's the next structure to stop price on the monthly, that is, not even the weekly, the monthly. The daily we don't have such structure. And the H4, we do have, of course, a couple of order blocks, but they are not fresh order blocks. However, they are part of entry order blocks on the quasi, right? The bearish one. All the time, the market is, well, not all the time, very often it is showing us buys and sell structures at the same time, not simultaneously like signaling buy and sell at the same moment, but the structure is being constructed on the buy side and on the sell side a lot of the time at the same time. And it may go trigger the sell side, it moves to the other side of the range and then triggers the buy side. And that harmonic movement happens, over and over again until it breaks one of those sides and it continues, have that continuation. So at the same time as we are on the daily time frame looking for that daily signal, weekly signal to go long, and perhaps even on the H4, at the same moment we have a sell structure being formed and being retested. And by that I mean this quasi, right? Higher highs, higher lows, breaks the neckline, goes all the way down, and comes back for the presumably the right shoulder. And we have two structures here that could tell us where we're going to be, where could price, if price is going to go retest this order block again, right? That's a possibility. Where is it likely to bounce? What structure is it likely to use on its way to go into that daily demand zone, right? It has one structure here on the H4 and another one at the top. Which of the two is going to take is anyone's guess. There's no way to know the future. But the edge is not knowing exactly the order block. The edge is knowing which structures, in other words, that there are two structures here, and we need to read price as price is within those structures to see if it is telling us that it is using this order block, because it's not gonna. Sometimes it has a V-shaped reaction, and then there's very little you can do. At least in my way of approaching the market with structures with quasi entry order block, I needed to come back to some structure. And if it's a V-shaped recovery or a V-shaped reversal, it's not coming back, right? So I wouldn't be able to enter. Usually it doesn't reverse on a V shape. It has some kind of retracement as it is reversing. So you can read that in the lower time frame. So if I go to the lower time frames, the H4, we will be looking. So we do have a structure here, 1 and 2, where we can expect some kind of selling pressure coming to the market as we're getting in it. We are already in one of those two. So we can go to the other time frames to see if we can get some alignment. And you can already see and have a hint on the chart that we do have a H2 order block that is also in the same area. It's not, by coincidence, because it's the same movement that creates the H2 and the H4, but it's visible on multiple time frames. That's one thing. telling us that we might see selling pressure coming in as we are getting to that area. If we go to the 1 hour, I think there was also on the 1 hour the same structure to be seen. It's basically the same structure. We are currently in it. Now we have a structure, right? That is where price is, has an increased chance of reversing from. Doesn't mean it's going to use it necessarily for a reversal, just because we have two order blocks on different time frames at the same area. But if it is going to use something, it's likely to be in relation to this order block. The second step is, the next step is we reprice, right? What is price saying to us? What is price action saying to us as it is approaching and as it is within that order block? Do we have a shift? Do we have a shift of who is in control? That's the question all the time. Who is in control? Is it the buy side or the sell side? Anyone in the chat, who is in control of price action in this, as we are getting into that order block on the H2 and of course on the H4 as well? But who is in control according to you? Can anyone, tell me what they think? Is it the sellers are in control or the buyers are in control? Very simple. Let's not complicate things. Very, very simple. Trading needs to be as simple as you can make it. The buyer's grace says. Very good. We have people in the audience. 50-50 says mode Tausif. The bulls. Yes, indeed. Yes, indeed. The sellers, Yogender, it's the buyers. In my opinion, it is the buyers that are in control. How do I know that? Well, for one thing, look at the size of the green candles, right? Look at those two big green candles and look at the biggest red candle that we have. Well, look at the body. That is kind of big, but not as big as the one previous to that, right? You can see that on the size of the bodies as well, that the size of the body is basically an indication of the selling pressure during that period. And you can already see that the buyers are winning the battle. They may not win the war necessarily, but they're winning certainly they're winning on recent candles. That's one way to see it. The other one is we are making, prices being pushed down and there is a consolidation. We're breaking out to the upside. Prices push down a little bit, we continue to break up. If you see this, we are going up, right? The tendency, we're making higher highs and higher lows. That's another just market structure. That also tells us who is in control, right? So even though we identify that this area could be an area, it's a potential area, it's an area of interest for sellers to come to the market, so far they haven't come to the market yet. Whether they will in the future is to be seen, and maybe they will. But right now, it's the buyers, right? So we have no business, even though we have an expectation that buyers might be coming back to the market in this area. We shouldn't trade on just expectation. We need some evidence. We need some evidence from price action telling us, I'm a price action trader. I want to see price telling me it wants to reverse from this area, right? Not a couple of days ago. No, I want to see it today, now. I want to see it now in the price action, in current recent price action telling me the sellers are taking control, right? And when you have those two things where they're taking control, what you expected, and they're doing it at a relevant area because of what you see to the left, that's where you have that combination that will increase the possibility of you being right, of your setup working out. So that's exactly what we're looking for. And on the H1, I don't see such price action at all. I don't see the sellers taking over, not yet, right? If we go to another time frame, I don't see any bearish engulfing, any bearish pin bars, well, this is a bearish pin bar. It's a bullish pin bar to be fair, but the wick does tell us it's 16, 12.9. It is a pin bar. It indicates rejection. But that's not enough. There's no bearish engulfing. There's no outside bar. So far, as long as it doesn't produce those candlestick formation, I'm not interested. Simply not interested. I want to wait for price to help me, make those quasi, and then I can enter, right? You see this leg? That's the leg where the sellers are taking control. They're able to push price much lower than that. This would be equally low, but they push them much lower than previously possible. That's the sign that they have taken control, and they're going to, push price, or they're taking control. They're going to push price most likely going forward to lower prices. All right, so on the 15-minute, let's look at the 50-minute. Well, what I do is I look for the macro, the daily, and the weekly to have an idea if I have a signal or not on the macro level, and then I go to the hourlies, the H4, H2, H1, and it's a personal choice, personal preference. You can use other combination. Doesn't have to be exactly that. But once I don't see what I want to see on the hourlies, I stop there. I don't go to the minutes, to see something that is not. If it's not visible on the hourlies, I stop. Right, but that's in terms of my trade plan and how I approach the market. We can still go to the 50-minute to reprice, no problem. And what do we see here? Right, even though I personally wouldn't be trading it, we see higher highs being created, higher lows, that is, I'm sorry, and higher highs. Right, that's a sign. That's an uptrend. Right, this is not a higher low yet. It needs to take out this line to be considered a higher low. Right, we don't know if this is going to do this and break lower. We don't know that yet. So the last low, this movement is nothing yet. You can't conclude anything. Right, but the previous one, you can see higher highs, higher lows. Actually, the other way around. Higher lows, higher highs. That's uptrend for one thing, but you can apply the same things I just mentioned. Where is price creating, and which direction is it creating the bigger bodies? Can anyone tell me? In the sell side, look at the biggest bearish bars we have from this point, right? Let me mark it, from this point to this high. Where is it? Where is the biggest bearish bars are these, and the biggest, maybe I should do it the other way around because it's a bearish one. Right, exactly. Look at the size of the bodies of the bearish ones, and look at the size of the biggest bullish ones. Look at their size. That alone, very simply, right? You can use market structure as well, but that alone tells you which side has the upper hand, which pressure is the highest, and it's not a coincidence that price goes higher, right? It's a sign of the same. It's the same thing. It's the buyers who are in control. So on the 15-minute, you can also on the 15-minute, you can conclude that the buyers are in control. The sellers, even though we are in an area where the sellers should or could come back to the market, so far they haven't come back. right? So to me, I don't have a reason to go short. I want to see the market, concur with me, agree with me right now, showing me weakness. And that's not happening. While if that's not the case, then I don't need to participate and, be stubborn thinking this needs to go down because I think so. It's not how to trade. You need to follow the market, follow price action. Don't think you know best. Let the market tell you. Let the price action tell you what it wants to do by reading price action. Very simple. Not using any indicator. Not using RSI, MACD, or I do use ATR, but I mean for reading the narrative. We don't need that. Though you can use them, nothing wrong with them, but you don't need them. Price action, just the candles can tell you a lot, and frankly, enough. All right, so that is euro dollar. We have, let's see here, we have let's look at this. We have let me go check in the background. All right. So on euro dollar, the opportunities I think for today are, one of the questions is, are we getting a reversal from that area? If we are, then that could be a very nice short to be taken, right? That's not happening. Price is not telling us that it wants to reverse from that area. So there's really nothing to do, just to wait, in my opinion, just to wait for price to do whatever it wants to do. But it's not happening. It's not showing us that it wants to short or wants to go lower from that area. So this is the area that I'm going to be looking at for today to see how price, while reading price action, if price wants to break it, respect it, or not. Okay, so, and if we look at the ATR for EU, we are currently at 61, and the ATR ranges around 88, 90 pips. So if we go to the daily, we can expect the high of today to be 88, 90. So on terms of the ATR, we have plenty of space on the upside, right? Without it expanding too much. That is one indication of what might be coming. Let's mark that, and I'll double check. 88 or 90. This is too much. So 90 would be 59, something like that. Okay, so I'm gonna move it a little bit lower. All right, so based on the ATR, we still have plenty of room to break out of this or structure and continue. If we do get that, we could, let me see what's that yellow line? I think it isn't important. Let's take it out. Okay, that's one thing. So price can still go up. Because we have news in an hour or 45 minutes, you can see that high of the day can be just a wick as well, right? Although that's going to be about 30 pips, a bit of a big wick, to be honest. But it's all happening, or maybe indeed it's going to break that structure and it's going to go, at least today, going to go much higher. We'll have to see. This is on the ATR, and then I'll check. I will, based on ATR, right? Okay, that's you can already see that for today, this area isn't exactly likely to be hit, right? Because the ATR tells us that this is the likely area to be reached, maybe a little bit higher. Maybe it's going to get some liquidity from this previous high, or and this is on the exact assumption that the expansion will be to the upside, which so far we know that's the price action, that's the direction price wants to go currently, and is likely to hold that. Okay, so Pulley is asking, how many days do you base your daily range calculation on? The ATR You can use, currently I have it at, let me see, I have it at 5, but you can play along with it with 10, 15, 14. The thing is, you need to know when to have a broader, uh, um, a higher number. I would like to have it as sensitive to last couple of days, and that's why I have it at 5. The reason is when you have an explosion in volatility, if you have it at 14, which is default, it's not gonna, represent or indicate the last couple of days so much because it's going to be an average of many numbers, 14. So in that case, I would rather have it at 5, and that's because we have now an explosion in volatility. I want it to be 5, but at other times when there isn't such a thing, such an explosion of volatility, I want it to be longer, 10, 14, right? Because I want to have a good average. The less number you have, the more, the less precise that average is going to be. So I want to have 10, 14, uh, but when it's explosive, we want to have it as tight to present time as possible. Okay. Okay, so let's continue. So we can already see that for today, this is the area on euro dollar to look for a possible reversal, and not necessarily the structure above us because of the ATR. It's not that likely. Although we have ADP, it is high impact. You could have a huge surprise, and price can reach it. Will it reach it more often than not? I don't think so, right? You can, because it's more than 100% ATR, and the ATR is already at 5, meaning it's very sensitive to the last couple of days, and we had some huge days on the gap. That Monday was quite considerable in terms of range. So I would deem this order block to be unlikely to be hit today. All right, we have Lawrence asking, do you look at previous month's high, weekly high as target price might be heading to? Yes, but I don't solely look at those. I don't solely target those, but I am aware for the those highs because as we know, other market participants are looking at the same things, and it will become a self-fulfilling prophecy. So we know that, right? Fair value gaps, regular gaps, like weekend gaps, they tend to be close. Why? Because everyone is watching, everyone is looking at them, right? So we are, they're gonna decide and act based on those structures as well. So they're going to be putting their stops, they're going to be putting their targets, they're going to be getting into the market as the market is reacting or going in that direction or is already in. So it makes sense to use monthly highs, weekly highs for targets. Um, haven't we seen that so many times where it creates those double tops, double bottoms? Why? Right? Because of those highs, those weekly and the monthlies, price will go to them, sometimes squeeze them a little bit. I call that squeeze, grab a little liquidity before it goes the other way around. Right? It happens so many times, so much so that it makes a lot of sense for us to use them as targets, or at least to have them in our charts. I don't use them as targets. That's at least I don't. That's not the only thing I use for targets. I have a number of like a palette of different things. High, a week's high, a month's high are one of those things that I would target. I would use the ATR. I would use, of course, OBs and quasis. I'll lose everything at my disposal, and I may or may not use the weekly or the monthly. Pooley asks which works best. We have Jonathan in the background. Uh, we have Pooley asking which works best in my opinion, 10 or 14. And of course, we're talking about the ATR. 10, the value, there's no perfect value. There's nothing magical about the 10 or the 14 or the 5. The thing is, you need to understand what does it do. If you understand the indicator, what is it meant to do? And when it says, when you're using 10, what does it mean? How does it change the calculation? When you understand that, then you can think which one is more applicable. As I understand, there, perhaps I should explain that a little bit. Imagine you have a couple of bars. Let's look. Let me give it some more opacity. Let's assume we have. Okay, so let's assume we have. Oh, that's not the correct one. There we go. We have. As you can see, I'm not an expert on TradingView, although I use them all day, all year long.
Are you creating candles?
Yes, I am. Am I doing it wrong?
Oh, looks looks great.
All right, so let's imagine. I know this isn't the best example, and this is impromptu, so it's not prepared. It's just to explain what the point I'm trying to make, and I'm having difficulties making it nicer. Of course, these are all bullish candles, but I'm not going to go through the effort of changing colors, red, green. It doesn't really matter. We're only looking at the size of the candles, and the fact that it seems to be going up, it might as well be going down, going sideways. It doesn't matter. The ATR doesn't look at direction. Okay, that's one thing. You got to understand how the ATR works. It only looks at the range of that candle, right? And the time frame you put it right. If we talk about D1 ATR, it's obviously only calculating the D1, right? The daily candle, which is one of the most useful application for the ATR. Now, if you are using an ATR which has, how many do we have here? We have 6. Actually, maybe I should create a couple of more. If you have, I'm only going to be using there, maybe something like this. Now we have 6 and 10. All right, what happens? What happens if, let's say you have this kind of movement in terms of the sequence in the ranges the ATR is, printing. What happens if these are 10 candles, right? So we have present time, which you can call 0, right? And this would be -1, right? 0 being present time. This would be -1. Do you understand that? And this would be minus 10. In other words, 10 candles in the past. Okay, hopefully I'm not confusing people. What happens if you were to use ATR on the 10, on value 10, right? It will calculate the last 10 candles, which is good, perfect, and it will come up with an average, which is, maybe I should keep them the same to make the visualization better. Let me adjust them a little bit. Right, you have them all on the same level. So this is not a chart. This is just a diagram of the ranges of, right, something like that. It's not precise, roughly, right? It roughly is the same, right? Don't pin me on it. Right? This is not a presentation. This is just me explaining it, without preparation. This is the ATR. What would be the average, right? Visually, without calculating anything, the average would be between the lowest low, with the lowest candle, and the highest. Somewhere in between, of course, there will be the average, would be something like this. Would you agree? We have 4 candles above it, and we have like 5 candles lower. Maybe it's a little bit lower, something like that. That would be the ATR, right? So the number it produces, it gets to you, is the average calculated in a certain way of the last 10 candles. Now, does it represent current price action, current range? If there is a change in the range, and you can see that there is a change, the last 3 candles have been compressed, they are different compared to the last 10, if you look at the last 10, right? The previous, maybe earlier 7. There is a change in ATR, and when that happens, if you take a higher value, it's not very representative, right? In that case, I would rather use something that takes into account only the last 5, or perhaps even the last 3, right? In this case, it would make sense to take the last 3, because lately this is the average of price in terms of the ATR. So as you can see, the lower the number is, the more sensitive it is to recent past. However, you don't want to have it always that low, because sometimes you may have something like this, right? I don't know, some outliers. You may have something like this in terms of the ranges it produces, and when you have it like this, it's still, with a lower number, you are better off, because the average of the range it is producing is more indicative. But if you want to have a good average, what you can expect next, it is in those moments much better to have it on higher numbers, because it gives you a better probability of being right. So depending on, if you have a more uniform sequence of ranges, it's much better to have it longer. And if you have a huge difference in ranges in the last couple of days, could be much better to have it on a shorter value. So depending on what is happening, are you having an expansion of ranges, or are we experiencing something that is uniform? If it's uniform, it's better to have a much longer ATR. All right, I hope that explains it a little bit for those who are interested. How's
All right, Victor, have you been trading?
Pump going?
Sorry?
How's the pump going?
Oh yeah, we have it on like a reserve thing going. So it's like it's heating up, but not very warm, and we're probably changing it next week, which kind of sucks because it's a lot of money.
12,000 is a lot of money.
It is. It is. Have you been all right? So what are we? What have been?
Either you're
been
muted,
looking
or
at here?
I'm something wrong with my audio.
I think it's something wrong with your audio.
I think it's mine.
I think everyone. Yeah. Victor. So I can say anything now, and he can't hear me. Interesting. It's a nice hat you got there, right there, Victor.
Yes. Now I'm back.
Okay, great.
Or maybe
all right.
not.
So
you know what? I think I need to. Yeah, I think I need to check. I want to do some checking, see if I can resolve this audio issue.
Yeah, I'm going to be here, so you can take care of that, and then you'll be back later.
Since I can't hear you, could you put a thumbs up?
No, it's all good. It's all good.
Now I hear you again.
Double
weird.
thumb.
All right. Okay, so I'm gonna go off and see if I can fix this. There must be
Yep.
a solution for it. I'm gonna come back in a couple of minutes. Hope to see you again, everyone, and keep those good questions coming. I'll be reading them as soon as I get back, and we can discuss them. Hold on, I'll be right back.
Right. So what are we looking at? Euro, GBP, not looking good. You know what? I feel like I want to. I feel like I should look at the line chart more often. It's quite like it. Quite like the fact, it becomes clean. Okay, so how can we make the line chart bigger? What can a line? Or there we go. Gradient. Ooh, whoa! Look at that. Look at that. Now we got two different colors on the line chart. Now that's interesting. Yep, definitely going to keep it that way. Okay, so we're going to settings and we can make the line broader. Ooh, look at that. That's good looking right there. I love that. Very nice. What color scheme are we going to be using? Maybe we can use the 5ers. 5ers got, it's like yellowish, yellow. Is it that one? Yellow and you know what? I'm not even gonna try. What if I can do like the chart color scheme? What if I can do that? That looks really ugly. So let's probably change that. Yeah, okay, that's better. But I wanted to have just a little bit thicker line on the line charts so that I can view it more easily. I'm going along on Euro GBP. Obviously, at this stage, enter this earlier today. At this stage, I don't really have to care about what price is doing. What's up, Void? Welcome, Vinicius. Say go lunch, Victor. I don't know when Victor is eating lunch, but it's like he's online when I think he's supposed to eat lunch. He's definitely a mysterious man, the man in the mask. Can I do gold analysis? Yes, I can do gold analysis, but I want you guys first to like the live stream. When I see that the number of likes go up only one, I will do the gold analysis. So make sure you hit that like. I'm watching the like. It's at 85. Can we get 86? 86 means gold. There we go. There we go. Okay, so let's take a look at gold. Someone put the settings for you, regarding the wick for candles. Yeah. Before we go into gold, I want to check that because we did talk about that. So I think it's symbol, right? And then we just remove the wick. Simple, right? Simple. And I think, chart looks very ugly when you do that. And the gaps become obviously very visible. But there's something interesting with doing this because now you get the whole range. You get the body, so you have a limited price, but you're not getting the extremes. So it's similar to what we have on the candle on the line chart. Actually, it's pretty much the same, isn't it? It's pretty much the same. Okay, so if you remove the wicks, it becomes, I guess, the same price data as the line chart. But if you're more used to looking at candles and not lines, then looking at the candlestick chart without the wicks like this gives you a sometimes easier way to kind of digest that information. All right, you're back. Can you hear me?
Yes, I can hear you, and my sound is better, right?
I don't think so.
You don't think so?
Maybe it is, because I got my speakers, and I usually have my headphones, so that maybe that's why. Maybe that is why. We got Dirk coming in here in soon as well. He can come in and help us out with whatever we're doing here. Did I interrupt you with anything, Victor? Maybe there was something you were talking about.
I'll be right back because
Okay.
I had it fixed, but I might be just one click away of getting it fixed. Hold on, we'll be right back.
Sure. All right, so guys, next week we're doing we're going to do me and Victor, we're going to do a 1-versus-1 trading challenge. Okay, and I want you guys to. It's going to be probably going to be next Tuesday, and I haven't really decided all the details, but we're going to be we're going to be trading on 2 5ers accounts, and we're going to be putting up 2 demo accounts, right? And we're going to be putting them on the same dollar value, and we're going to be trading those 2 accounts live here, doing a one-on-one challenge, and we're going to try to see basically who can make the most amount of money during the trading session. So maybe it's going to be 2 hours. Yeah, maybe we should get Alex in on that as well, so we can have me versus Victor versus Alex. And you guys should know that we had a competition like this last year before I joined the 5ers, and it was like a community challenge that we had within the 5ers, and Victor actually won everything. He came in at the top spot, and there were quite a lot of people in that competition, and he earned the top spot. So Victor is a really good trader, and going one-on-one with Victor, I'm not expecting to win, if I'm going to be honest, because I believe he's a better trader than me in terms of making more money, So a challenge like that is, if I win, going to be some bragging rights right there. So really, really interesting to see that. Yeah, my money is probably on Victor. So what I'm thinking is, what if I just wait till he enters a position, then every time his position goes into drawdown, I will enter the exact same trade. If it's a winner, my risk to reward will be slightly higher than his. And I think that's one way that I can actually win against Victor. That is a good approach. Right, so let me just go through some of the well, thank you very much. Thank you very much. We got one person believing in me. That's better than nothing. Okay, so let's just go through the markets here. I got my whole watch list here. So what I'm going to do is I'm just going to quickly go through the markets for you guys here and just give you a complete rundown of what we're watching here. I'm just going to increase the watermark in the background as well to make sure that you know exactly what pair I'm watching here. Okay, so we got USD CHF. We are bearish on USD CHF. So I'm going to go through everything on the weekly, right? So we are, 2 people. Whatever. USD CHF, we are bearish on this daily candle close. I'm definitely bearish, and I'm looking to short this to the range EQ around 0.88. We got USD CAD, which is USD CAD is, I believe, possible accumulation distribution range up here. So I'm looking to short this down to the 138 area below. Get your USD. I'm looking to perhaps go long on this, but I'm also looking to, wait for some confirmation, maybe a break and retest of 1.05 up to the cycle highs, which is around 1.1-ish. And we got Euro GBP. I'm already long on Euro GBP, a classic break and retest of a high time frame level, looking to take this up to 0.85. Euro 80 is nothing. Euro NCD, nothing. Euro CAD is... So Euro CAD is... you know what? I can't use that watermark. That is just... looking at Euro CAD here, it's definitely within a good area. It's testing the 0.61 here, but then if you look at the broader picture, that you zoom out and you look at the high time frames, it's just not that interesting, right? It's just not that it's not something that I want to be trading, so we can move on to EUR/CHF. EUR/CHF, I want to long EUR/CHF if we reclaim the 0.94 area, and I want to long this based on this high time frame channel that we have right here. I want to go long up to that short reload zone, but still, this is a low conviction trade and low conviction analysis. I'm not going to take this trade. GBP/USD is showing us very interesting developments right here. If we look at this channel that we have drawn out, and we've talked about this throughout the week, we now have we had a gap down, and we retested that level right now. We broke out of the down descending channel. We have local uptrend. So I'm looking to go long on GBP/USD, but I'm not really sure exactly when or how, but I do know that I want to go long. Victor came and Victor left. We got GBP/AUD. So GBP/AUD had a very good bounce of the 0.618. We did look to go long on this one, if you guys remember. And let me change that watermark in the background again.
I'm back.
You're back. Welcome back. Can you hear me?
With better sound, right?
Oh, yeah. Definitely.
Yeah.
Much better. Much
Better. It was very simple.
What? It was what?
It was very simple. It was just by accident I had muted my mic on my keyboard, and I was looking at all kind of different settings and windows, but it's my keyboard that was suppressing my mic, and but figured it out.
You have a new keyboard, don't you?
Yes.
Can you show everyone? Show the camera what keyboard you have. Oh, look at that! We're like brothers. I'd say brothers in arms, but more like brothers on fingertips.
I love it.
That's so
love
good.
it.
Yeah,
it's such a pleasure to type.
What is it? It's the Logitech MX keys. We're not affiliated with them.
No affiliation whatsoever. But I just love it. Typing has never been so pleasurable. Oof.
Yeah, I love it. I know it's actually a really good keyboard. It's a really good keyboard.
It is.
Okay, so I'm gonna continue here. We have Dirk as well. Can I add you, Dirk? Let me know if thumbs up or if I can add you. Okay, I'm gonna boom. There we go. What's up, Dirk? Welcome.
Hey man. Hey men with E. How are you guys doing?
Man with E, indeed. How are you doing?
Hello, men. Yes, we are men.
I heard you just now talking about new keyboards. I'm in fact looking for new keyboards. What can you recommend?
Logitech MX keys. It's really good.
Is that like a cable bound one or?
No, it can be. It's wireless, but you can connect it to.
I want a cable bound again. The one I have here. Sometimes I don't know why. It's like maybe it messes with my other USB stuff here. You press like something, like a letter or something, and then it like just keeps repeating the letter for like a minute. It's like stuck in an infinite loop. And I'm super afraid always to use it for trading. Later stuck on the buy or sell button.
Yeah. That would be fun.
Oh, sorry, I didn't want to buy 50 million euro/dollar.
Yeah, and it doesn't really help to blame the keyboard, either.
Yeah, that's true. Yeah.
No, but I would definitely recommend the one we have. Actually, Jonathan was the one who recommended me. I already had an idea, but he confirmed.
What was Logitech? What was that?
Logitech MX keys, if I'm not mistaken. Let me check. What is the?
Yeah, you can get the mouse and the keyboard for I think it's $200 or something like that.
What? I didn't want to buy a whole new PC, man.
No, get it. Get it. You should get it. It's really it's heavy.
Dirk,
that's
I'm
good.
A frugal guy.
That's good. So if I have a not profitable day, it will be nicer to throw the keyboard against the wall. We'll do more.
Exactly, it's really heavy, so you can probably you can almost use it as a weapon. I'm sure it's really.
Okay, thanks for the recommendation. I'll have a look.
It's MX keys S. That's the model that I have. MX keys and then S, the letter S at the end.
Oh, you have the S. What does S mean?
No
superior,
idea.
super trader.
Okay.
But I don't know what the S stands for, but Dirk, I'm a frugal guy, right? So I'm very cost conscious, and it has this is a very good buy. Believe me, it
Okay.
is.
Yeah.
Well, if it comes
He's gonna
from
get
you,
it.
I'll definitely have a look later. Maybe we have some kind of deal for that at the moment.
To me, it's
Yeah.
it's a game. It's a game to be frugal. I enjoy being it. I know it sounds weird, but
What does that mean, frugal? Sorry.
Cheap, basically cheap.
See, I mean,
Cheap.
you are like cost sensitive. No, that's a good thing to do.
Exactly.
I can give you
There
the
you go.
definition.
You
It's
don't get rich by
sparing-
spending money. So
It's sparing or economical as regards to money or food. Is that's
something
the
good.
really bad definition?
No, that's not a good definition.
Sadly, the definition for food is not for me, though.
No, the actually the best definition, and this comes from a frugal guy. The best definition is, I think, is to get the most buck for your money, right? So
I totally agree with that.
That is,
Yeah, I'm not a frugal guy.
value.
Definitely not.
I want to get the best value for my money. So if something costs twice as much, it better be at least twice as better.
Yeah.
If it's not, then it doesn't make sense for me. You understand?
Well, I totally agree with that. I totally agree with that.
So, yeah, I'm the type of person that I probably think more after spending.
After?
Yeah.
So satisfy your itch first and then start thinking.
Yeah. It's like, I'm going to buy this, and I buy it, and then afterwards I'm like, do I really need this? I mean, like when I bought when I bought that coffee roasting machine for 1,200, and I haven't really used it a lot, It's
okay.
With the keyboard, Dirk.
Yeah.
I, and as well you and many of us watching this, how much time do you spend on your keyboard every day? A lot of
probably
time, right?
10 hours. Yeah.
Exactly.
Yeah.
So a little bit better compounds in time. It accumulates into having a little bit of a benefit, because you're not using it just once. You're using it every day for hours, and this keyboard is has a superior experience.
Okay, I'm sold already, man. It's like
yeah, it is.
You should become a salesperson for Logitech.
Yeah, we got to be careful, man, because like we probably have to invoice Logitech soon.
Yeah, right. Yeah. How come whenever those guys live stream, our sales go up like crazy?
Yeah.
They're sold out right now.
I'm in the process of just going through the markets here, seeing if I can find anything interesting. I really like AUD USD. We had Anastasiia on here earlier today, and she talked about how she was looking at a short on AUD USD down to like this level, and I'm actually looking to perhaps start building positions again on USD weakness, because if you look at the dollar currency index, we do see that what looked at it as a very, very strong move to the upside during basically yesterday, I believe, or not yesterday, but
I remember we were talking on Monday about it, right?
Right, because that's the wick on that Monday candle. So we did have that USD strength coming in, but now what we're seeing is the move is retracing, and we have a potential. This is actually I would say this is the first time, if the weekly candle, is going to close down here, this is the first time that we actually have a proper lower high, I would say, on the weekly. I don't really like this as a lower high, because price basically just went straight up. So it's not really a lower high until it creates a swing point, and this is some sort of swing point. So I do believe that we are seeing, obviously it's quite obvious that we're seeing dollar weakness, but I think maybe the ideas that I had of, for example, USD CHF short, if you go to the daily, you see that it kind of seems like it's potentially playing out here. So I do think that we're seeing a dollar weakness come in here. We have NFP as well, don't we?
On Friday, yeah.
On Friday,
and
yes.
The JOLTS job openings came in a bit weaker than expected. So usually when that happens, you see the NFPs, not always, but quite often also not quite hitting expectations, which would be good for the market. It would be a positive sign because, the market really is wanting those interest rate cuts, and the Fed wants the job market to basically tank for that. So there is still hope, but let's see. The market's very cautious, in my opinion, today. I've been looking earlier also in some EU shorts, actually, but kind of missed the boat there. So I'm waiting right now for the area around 104.30, if there's some price action again, to potentially do a short there. Other than that, there's actually not much that I found today, which, in my opinion, is tradable.
Yeah, I'm going to bring your chart up, Dirk, and I'm just going to come back in a couple of minutes.
Yeah, sure. Yeah, so basically this is like when I look on the lower time frames. I love the 2-minute time frame, by the way. I like Heikin Ashi charts. So this is what I look usually at here. It's kind of like Dirk, the gist of my trading system. Yeah.
Could you explain to anyone who doesn't know anything about the Heikin candlestick chart?
Yeah.
Can you explain to them what is it? What is different than normal Japanese candlestick?
They at first glimpse they look a lot like normal candlesticks. No, when I switch back here, there's not so much difference, right? But what Heikin Ashi charts do is they average price. So you always you don't see like in classic candlesticks where was the highest, where was the lowest. It's always an average price. They are over a period of time displaying. There are different calculation methods that you can use for these. I use here the standard ones that come with TradingView. And I like those because I noticed for my long-term Forex strategies, once I started using those, I got better results. Now, long-term, I always trade options, as some of you guys may know. I can, for example, share here how that looks. So what I, in terms of charts, look here, usually at, let's switch to euro dollar here. Takes a while until everything loads there. So this is kind of what I usually look long-term for, because as somebody who's selling options, you kind of want to know always where are the major zones of support and resistance. And since I'm a lazy person, I don't want to manually draw those always. So I use an indicator here called dynamic support and resistance zones by Chart Prime. You can find this one also for free on TradingView to kind of get an overview of where we are. And we can see here we are right now in the middle. So the next zone of resistance is here somewhere around 105. So typically this is like where, so slightly above that, I would probably write some calls. I'm still in position, so I'm not opening new positions at the moment. But as long as for swing trading positions, for more long-term positions, as long as we are somewhere in between, between here, the next support here around 103.25. As I said, next resistance, major resistance at around 105. I don't really see the necessity to do much from a swing trading perspective, or also from a perspective of necessarily opening new options positions. When you trade options, at least the way I do that, you don't. It's always a game of judging how likely is it that your option strike is going to be reached. So you don't as much time your positions like you would maybe with indicators or with what Victor is doing, for example, with his quasis, I think, and outside bars and bearish engulfing patterns. It's more about engaging the position and then trying to manage your risk. And I kind of have gone to using Heikin Ashi charts for that, also on the lower time frames, because it works with my indicator setups just nice. I like to focus very much on the 2-minute charts. here in euro dollar, for example, we had really some nice signals. I kind of missed this earlier because I was in a meeting, sadly. So what I would typically look for is, I know this chart looks like very complicated. There's a lot going on there, but it's really not that complicated. I would look here probably same as Victor does actually for levels of Confluence. So I would, for example, say, okay, we had a sell signal here from one of my indicators, from my market equilibrium indicator, and this sell signal happened in an area up here where, according to at least my indicator, my trading logic, we have kind of reached what could be considered a local top. So this is the dotted brown line, for example, you see up here, and very often it works very well. So what I do usually is, when I kind of have a profit target, I look on the close of a signal where, for example, is this green line, which was at 104.12 at that moment. And this is going to be my profit target. Then I'm half of that distance to the top would be my stop loss. So I have a positive R for that trade of 2 to 1, which I usually want to have. And then I engage in the trade. But as I said, at the moment, we are kind of in nowhere land. So we are somewhere in between, which is not interesting for me. So I would wait always until either we reach here the upper line, which is at the moment at around 104.30, or the lower one, which trades at 103.90. And this is typically, like on the lower time frames, the kind of discretionary system I use. There's a couple of more things, so it's not completely mechanical. It's really, for me, just that I'm alerted there's something going on. I could, for example, then, if I get a signal like this, also look for price action to see, for example, at this upper line, do I get here on the lower time frame, or maybe even on a higher time frame, for example, a bearish engulfing pattern. And I'm very, very picky. I don't trade a lot, especially in Forex spot positions. I actually rarely do. I like to do this kind of game more on cryptocurrencies. So I'm parallel looking always here at 6 cryptocurrencies: Bitcoin, Doge, Cardano, Ethereum, Solana, and Ripple, where I wait basically for entry signals. You can see, for example, here earlier we had one in Ethereum, which I also didn't trade because I would have liked it to be perfect, more aligned here with the upper band. It was a little bit too low for me. So as a profit target, which I said either can be this green line here, or the blue line, which is the 200 units moving average. So 200 times 2 minutes moving average. Right now we are trading somewhere in the middle of everything. So I'm sitting here and waiting, maybe if once the USA come in, if we are going to see more action again. Have you found any trades today, Victor?
Nice. Actually, while you were talking, we had news coming out.
Oh, we did,
I'm going to switch to my screen on the 1 minute. We can clearly see when the news came out, which is at 15 past the hour, and we didn't have much of a spike. The 1 minute candle was 7.6 pips. That's that is more than usual, but it's not like humongous kind of a peak. We can clearly see that it's the market is reacting bearishly to it, euro dollar, I mean. And you can obviously see that on other pairs as well, on pound and on gold. There is it's not as clearly to be seen, but you can see obviously that 1 minute, that's the reaction of the of the news. So the news isn't as explosive as we would have thought, but it is looking coming back to the analysis I just did. I spent, I think, about an hour or so doing the analysis, although I explained about ATR and other things as well. But this is the area today that is relevant to me. So that's where I'm going to be looking for a possible entry. But so far, I don't have a reason to look at the H2. I don't see anything of the sellers taking over. The one hour, it is looking like an outside bar, but it still has 40 minutes to go, that bar. So it's too early to say anything. It's a moving average. We shouldn't trust those moving candle. I mean, not average.
Is that
So I
like,
wanna,
let's say if that would be a close now and it would be an outside bar, would that be a trigger for you to short EU there?
not a trigger, but yes, that would attract my attention. It will have my attention for sure, and I'll be zooming in because it will, at least in this time frame, it would confirm that we have something, that I have something to look for. And that would, if it would close as a outside bar on an H1 in an area of interest or where I'm fishing, so to speak, that gives me permission. That's how I see it. It gives me permission to go to the minutes. If I don't have it, I don't have permission. I have nothing to do to the 1 minute. I mean to the minutes time frame. And I say it gives me permission. It sounds funny because I'm my own boss. I need to who tells me what I can and cannot do. Well, the thing is, we as traders, we are lousy managers of ourselves. And as a trader, you need to have someone controlling you, and it needs to be yourself, because that's unless you're within a brick and mortar prop firm, you need to be that manager. And that's why I like to say I have permission to go to the minutes, because I give myself that permission, and otherwise I don't have permission. Right, that mindset that I need to keep my behavior, my actions within the certain boundaries. I know it sounds silly perhaps, but it helps me a lot with my mindset.
I don't think it sounds silly at all. I mean, this is what you see for everybody. Like if you look at pro athletes, doesn't really matter what sport, like tennis, track and field or whatever. You also notice that they kind of always have the same routine before they play a ball, before they start running. It's always the same because they want to make the outcome of what they are doing as repeatable as possible within certain boundaries. And I think this is something we have to do as traders as well. And I agree with you. If you don't see something on the 1 hour time frame right now, why should you go to the lower time frame? There's always the risk then that you see something there or that you sell something to yourself, which ends up being a mistake maybe. So I very much agree with you. And I in some ways I'm like, probably people will laugh at this as well. I also try to have my daily routine to be always the same. Like I always have, during the week at least, breakfast at the same time. I have the same kind of routine when I walk to office, what I think about, how to get my mind set up for the day. And even pre-trading, I have the same routine, just to make sure, that all of those little variables that can mess up your trading decisions and influence your trading decisions, from good trades to bad trades, no matter of the outcome, are as unlikely, at least, as possible. It doesn't protect me from now and then screwing up, which is part of the game. I remember, Victor, we talked about getting too overconfident, which I really had to smile at when you said that, when I look into my trading journal as well and see like, wow, I had 10 winners in a row. I'm the master of the markets, and I have intrusive thoughts like this. And then I know already it's time to either walk away for that day, or maybe even for a couple of days from my trading screen, or sooner or later there will come a phase again where I have a drawdown and where the market will make me humble again, rightfully so.
I like that. I like that idea of having, very strict routines and habits throughout the day. A lot of people they think that it sounds boring. It sounds like you're stuck in a certain way of living. But I would argue that having very strict routines and habits actually creates freedom. It frees up time. You know what you can expect from the day. You know what to do. There's no confusion. It's very organized. So it actually frees up time. And as we know, time is freedom. So I think having being very disciplined with the habits. I mean, I'm the type of person that I have a lot of good ideas of how I want to run my day, but seldom it turns out the way that I envisioned in the morning maybe. But I'm trying to build these habits, going on a walk every day, a specific time every day I go on that walk, and I, just like you said, I do certain things on that walk, think in a certain way, listen to certain things that I know it helps me to get into that right mindset.
There's also obviously I completely agree with that. But there's also two things I want to add. One is, if we want to get consistent outcomes, our processes need to reflect that consistency as well. And that's what Dirk is mentioning. He has a consistent process, things he does in a certain way every day at a certain time. And that consistency will translate into the outcome as well. Of course, it's not perfect. It's not because you do the same thing at the same time every day that necessarily all your trades are going to be, a certain way. But that helps. It helps with the consistency. Your mind also will appreciate that consistency in processes that you have in before, during, and after your trading. So if you want to have consistent outcome, one of the ways is to have consistent approach or consistent process, even outside of trading, before you get to the trading desk, in your sleeping patterns, in your, everything else, but especially as well in your trading, right? If you're looking, you have this one trade plan that you consistently go to and apply to it, it's going to help you, 10 times and give you 10 times more consistency than if you have, like loose ideas where you want to be trading. I know it's very sexy and very attractive to be, a discretionary trader, the master who can read the market and do it freehand and just look at the market and say, I know where the market is going to go. I'm going to sell or buy here. But the reality is, you're probably much better trader if you have a consistent approach to it. It'll be much easier to your mind and your mindset, because you basically you won't be going into extremes. I like that. I think that's a cornerstone of of my success.
And it's so funny, no? It's like when you see on social media always the so-called successful traders, a lifestyle of a trader, driving around in a Ferrari, having like a fancy office and so on and so forth. And I always think like this couldn't be farther away from reality. Like if I would turn around my camera here, I think you would be shocked by my office, because the only decorative elements are behind me. Other than that, it's a white wall. Really, because
it's exactly the same thing here.
On purpose, because I don't want to be distracted. I want to be in the zone. And I don't know if you guys have read The Market Visits, this book series by Jack Schwager. That's in this whole book series is only one trader who's not even interviewed, but just mentioned as a side note, that does discretionary trading, that only trades based on feelings. The only one out of, I don't know how many has he interviewed by now, like 50, 60 maybe. And this should tell you something, because those are the people that are the most successful over the past 40 years, probably.
Yeah, it should tell us that discretionary trading is possible, but it's very unlikely that you'll. It's very, very unlikely. It's like, I think yesterday I talked about the failure rate in trading, and then I put all the swing traders in one basket and all the day traders in one basket, and I said that if you look at on the bigger picture, you look at the swing trading basket, I think you will find a higher percentage of profitable traders in the swing trading basket than you would be in the day trading basket. And then if you look at that day trading basket, you kind of zoom in, right? And then you look at the discretionary traders within that basket, the win rate is way, way lower. And I would like to almost compare that with looking at athletes, like high performance athletes, and the gold medalists are the full-time, long-term, consistently profitable discretionary day traders. It's so incredibly difficult to do that long term, and for most people it's probably out of reach. So for most people, you have to kind of start where you think the win rate is highest, and I think that is half time trading and looking at the bigger moves. And if you're successful doing that, zoom in, see if you have the personality for the lower time frames, but be realistic in the fact that you're most likely not going to be able to be a discretionary trader and make money for the next 10 years. It's highly unlikely.
Yeah, absolutely agree with that, Joe. Oh yeah, we have Canadian data coming out in 7 seconds. So balance of trade.
Okay, USD CAD. Let's dump it. USD CAD. We need to dump USD CAD. Let me bring my screen up here. We got USD CAD is gonna just dump. Look at this. This is I want to take this trade.
Less than expected.
Less than expected. I don't know what that means, but we'll see.
Why is Canada going stronger there? That's
okay. Well, I really I'm if this daily candle closes around this level, then I would definitely say that this is a confirmed break to downside. And tomorrow I will be looking at short positions on this. I feel like I like the idea of saying like, yeah, I'm gonna make a decision tomorrow. You know, but then that's one day before NFP.
Yeah, that's the thing. No, yeah. This week, which makes this week a bit weird. We first had on Monday this crazy volatility, all those gap openings in Forex pairs, especially, of course, US dollar denominated pairs. And then kind of through the week, it feels like everybody's waiting, to get kind of over with the non-farm payrolls. So there are sometimes outbursts of volatility, and then it just goes flat again. I see that especially in cryptocurrencies this week. You either have like crazy moves or you don't have any moves at all. Super difficult to trade. I think so far in crypto, I did like one trade this week. And
yeah, but isn't that also, I mean, we talk a lot about time, and the older I get, the more I think about time, like as an asset, as an asset that
it is.
It's just depreciating over time.
I'm very fascinated by the subject at hand. But I'm going to be taking a little break of about 30 minutes, and I'll come back. And too bad I will not be able to participate in the discussion, because it's very, very interesting, the importance of time as we grow older. But see you guys in 30 minutes or so.
See you soon. No, but I mean, we can talk about the subject of time, right? And the fact that we say that time is money, and time really is money. I mean, we work and we get a salary, and we get a salary because we spend our time for someone else, and we get paid for the time that we spend. And I want to view trading in the same way. So it would be interesting to see, for people to do an experiment, like spend 10 hours trading the lower time frames, or let's say spend a month with your day trading system, and spend a month with your swing trading system. How much money are you making on both, and how much time did you have to spend to make that amount of money? And if I look at my trading history, I think that day trading for me is not worth the time investment, but looking at swing trading, it's very much worth the time investment. Because the way I'm trading now, of course, now I'm with doing the live streams a few hours every day, so that means I'm trading more. But looking at this, it's set up like this, for example. Well, I know that whatever happens for price today doesn't matter, because I'm only really interested right now on the close of the daily candle, and it's going to require me perhaps just 20-30 minutes to analyze this and make a plan. And then tomorrow I will simply just spend maybe 10-15 minutes before making a decision and go long or short on this position. And if this runs down to target, that would be a 2-hour trade in perhaps, let's say, a month. Okay, so let's say it takes 1 month for that to reach 2R. Let's say I risk 1%. I'm up 2% on the month, with spending a total of maybe 3 hours on this particular trade. 3 hours in a month, 2R. Now, if I look at my results when I'm day trading, I would probably make the same amount of risk to reward, like somewhere between 2 and 5 or something like that, depending on what I'm risking. So for me, in the end, what I've seen when I look at my results is I'm making the same amount of money, which then makes no sense for me to spend more screen time.
But first of all, if you make 2% per month on average, that's an extremely good result already. No, let's not forget that. If you end up making 24% roundabout, even just 20% per year on your whole portfolio, that's fantastic. This is always important to keep that in the back of your mind if you're a beginner, and not do things like, or have expectations like, I'm going to double my money every month, and by the end of a year I'm going to be a millionaire. Like sometimes I see on social media, I don't know if there's somebody who like is advertising for their trading group or whatever, this, I want to do 1% per day. And if you actually take your time, and you open an Excel file, you put that in, how that compounds over time, you will see for yourself already that just from a mathematical standpoint already, that is not possible, because you would reach very soon a size that is just not tradable, that it's like
I think
fantasy numbers,
I think if you start with $500 and you compound that with 1% per day, I believe that in 10 to 15 years you're gonna have probably maybe tens of millions, if not more. So it's just absolutely ridiculous. And if you compound that over 50 years, you will have more money than probably all the richest people in the world are worth together. So it's just completely unrealistic what we see out there on social media.
And also, I always think there's a time for swing trading. There's a time for day trading, for scalping. And this is all depends on the volatility. If I see flat markets, if I see the market, like I just said on euro dollar, it's, somewhere in no man's land, why should I sit down then and try to day trade this? Why don't I just wait for the opportunity to do that, either when volatility picks up, like we saw, for example, on Monday, because with a heightened volatility, there will be more chances. The market is not going to work perfectly then. So you have a higher chance of seeing more price action also, as Victor probably would say now. And so wait for that. This is also, by the way, why I'm not a friend of totally strict mechanical systems that you trade like no matter what is going on there. I always think you need to adjust those to volatility translating to reality. Whereas with swing trading, especially if you do like you just said, maybe even of weekly charts, you very often find, not very often is like relative, of course, if you look at weekly charts, but let's say like 3 or 4 or 5 times per year, you find this really, really good trading setup. Everything is in sync. The price action is exactly at the right level. You have a very good risk to reward ratio, and then you execute. And this is all it takes by the end of the day. So, when you see a flat market, when you don't see volatility, do yourself a favor. Don't try to day trade this. And if you try that, I can guarantee you're probably doing this because you actually don't want like the feeling of earning money. What you want is the adrenaline rush when you click buy or sell, and that multiple times per day. And I can understand that, because probably we all have been there before. Like this exercise and patience is so difficult. And you're absolutely right, Jonathan. The older you get, I'm turning 48 this year, the more you cherish your time, and the more you realize, well, probably I'm already past the 50%. I've less than 50% of my lifetime left, if I'm lucky, and if I stay healthy. So you cherish your time, spending that maybe with your family, if you have a family. If you have, in my case now, I like to spend as much time as possible with my daughter, because who knows how long I can do that. And
no, I'm absolutely with you.
Another nice thing when you get older, in my opinion, is you don't give as much, you don't care as much anymore what other people think about you. I noticed that.
I mean, that's one thing with the older you get, the more it's like the more confident you become, and the more, and I think like that has also really helped me in trading, kind of looking at where am I spending my time, and kind of trying to build a trading approach that also aligns with my with that life philosophy of really spending your time in the right place.
And being confident is like super important, no, as a trader, because there's so much like opinion against your position direction out there always.
Yeah, and you have to switch that confidence quickly. You need to be what's that idea that you strong opinions loosely held, right?
Yeah.
You're going to have very strong opinions. Like for example, here I have a very strong opinion about AUD CAD. I think it's going to bounce here, and I think we're going to move up here. But if I'm proven wrong, I will instantly change that approach. I will never marry that idea. It's like as soon as that idea is invalid, and I think a lot of people as humans it's difficult for people, especially in today's day and age, where you look at the political discussions where you select, you're either right or you're left, right? And then if you're right, you're going to be right on every subject, right? And if you're on the left side, you're going to be left on everything. Like there's no middle ground. Like it's like people stop discussing these issues. And in trading, you can be long your USD, but you got to make sure that if you're proven wrong, you get out of that idea immediately, no matter what your bias is. And I think it's difficult for new people that get into trading, because a lot of people, and in the beginning, I see a lot of new traders, they say something like, well, Bitcoin is definitely going to move up because they're doing this in America and they're doing this, and I read this news article, and Bitcoin is definitely going up. There's no question about it. I'm going to buy Bitcoin here. And it's like, yeah, but what if you're wrong? Well, I'm not going to be wrong. Well, what if you're proven wrong? Well, I'm not going to be proven wrong,
Yeah, that's the thing I don't like about this hodl mentality also,
Yeah, exactly.
Like, I don't care, I'm going to hold on to it no matter what. Diamond hands. Probably is that something like from this Wall Street bets thingy on Reddit? Yeah.
And the problem is, they get proven wrong, but they stay in the position because they have now taken a position, and accepting that position is wrong means you're being defeated in a sense, which isn't the way it is. In trading, it's a strength to change your opinion.
Absolutely, yeah. And but it's so difficult. I think we spoke about this also on Monday. It all boils down to ego then. And by the way, this information biasness, this is like one of my weaknesses. I like for long term, once I have an opinion, it takes a lot to drive me away from that opinion. And sometimes it happens, like it happened, for example, on Monday when you were showing me the US dollar index, because I had the strong opinion, or I think we're going to see US dollar strength in the upcoming months. But after you showed me the chart, I was like, wow, the pattern is actually the same like last time. I think actually we're going to see weakness in the upcoming months, maybe now.
Yeah, and you have to really let people. You kind of have to let things influence you, but have a very strong filter, because I can have a very, very solid idea, and then you show me something, and it's like, wait a minute, this goes against my idea, and it makes sense. I have to listen here, and I have to see, does the things that he say actually make sense? And if it does makes more sense than my analysis, well, then I have no choice but to go with your idea.
And you should be happy about it, no? Like I was very happy. I thought, oh my, Jonathan saw something that I didn't see, because I didn't compare, like in that case, how was the price behavior, the price action of euro dollar, or the dollar in general after the first election of Trump. And now it makes perfect sense for me. It's like, oh, wow, thank you, man. Thank you for delivering this missing puzzle piece to me.
Yeah. No, I
Which
think
probably is going to save me some money, hopefully.
Yeah, maybe. Like I'm not. Well, don't blame me if I'm wrong.
Yeah, I was just about to say, when I can do the second mistakes traders do, blaming somebody else.
Yeah. Dirk, we have a question here from Ahmed. It says US30 and gold, but we can look at that perhaps.
Yeah, we can have a look at that. I have to say here that both US 30, I'm not trading normally, so I'm looking here at the S&P 500. And actually, I can show you a different chart there. But if the good news is, if the S&P 500 is going up, the Dow Jones is going up as well, which is the US 30 index. Let me just very quickly search for the chart. I wanted to show you. So yeah, this is this one here. And you probably, I mean, we can apply this also to US 30 actually. Yeah, it works the same here. So if you've guys watched some of my content, if you've listened to me here, I look a lot in trending markets at so-called bull market support bands, which is this one down here, the green and red line. If you type this in here in indicators, you can find that as well. Free indicator, very helpful because around those bull market support bands, when the market is trending, not in a sideways market, please. This is usually the area where the market reverses. And you can see here, this was very true also last time here for the Dow Jones. I actually made a video here for the S&P 500 on the day where we touched this and said, like, you know, if this bull market is still intact, this is a good area to buy. So as long as the fundamental structure doesn't change, and you can see here it's more clear still on the S&P 500 than on the Dow Jones, but let's stick here with the Dow Jones, is as long as we don't see a lower low, so we in order for the structure of a market to change, we would need to see a lower low, so somewhere here, because then it would kind of look like that at least we are going from a uptrend market to a sideways trend market. Maybe even, you know, the dynamics are changing to a bear market, which is something I'm expecting for later this year. But you never know, could happen sooner, of course, as well. So as long as we are trading between this zone up here and the bull market support bands, or even this zone down here, you know, there's nothing really you can say, like, is this still a bull market? Should I invest in it? Shouldn't I invest in it? My go-to strategy always is here, when I'm in doubt, I'm going to go with what currently is still true. And currently it is still true that this looks like a bullish market. You could always argue on top here, of course, that was a double top. Yeah, could be possible. That's the thing about technical analysis. It's not like 100% correct. But my strategy at the moment would be here, once we go back to either here the weekly 8 weeks moving average, which is the blue line, or the bull market support band, to buy again. Now, I think the second one was gold. Yeah, gold you were asking about. Gold is like, together with oil, gold is my Achilles heel. I almost never trade gold, and I almost never trade oil also, because I always lose. I don't know why. It's like a curse for me. It's like I tend to lose money with whenever I trade those assets. But
maybe it's the volatility. The gold, you know, gold is
crazy.
Yeah.
It's crazy for a legacy asset. Is like crazy, the volatility. But I mean, as a matter of fact, you can look at this. This is a very textbook definition of a bull market we are seeing here. So if I'm thinking of, first of all, in talk about swing trading now, of course, and not like scalping the 2-minute charts or something like this. In a market like this, my strategy would always be to look for long trades and not go short. And the typical long trade I would be looking for here is, again, at this structure down here, because we can see that here again. This indicator really works so beautiful together, especially here with the 8 weeks moving average. Whenever we touch this, there's a high likelihood that this is the zone, you know, where the market reloads and then continues into its main direction until it doesn't anymore, of course, in the future. Eventually, these structures will break. Now, this is just, you know, my opinion on how I would typically trade a market like this. As I said just now, I'm not trading the US 30, the Dow Jones, because I'm trading the S&P 500, because I think it reflects on a broader scale what is going on with the stock markets. There are also differences in the way it's calculated. For example, the S&P 500 takes into account dividend payments by companies, which the Dow Jones doesn't. And this is a critical component. So you have dividends priced in within the S&P 500. And in my opinion, at least, but everybody likes different things. This shows more the reality. And yeah, with gold, it's like it's crazy. I've never. I mean, it should be like the. I mean, we could argue here from a fundamental point, maybe that just comes to my mind. We are seeing gold surging. First of all, because we have a US dollar strength, and we are looking. Gold spot is measured in US dollar. So when the US dollar gets stronger, of course, you have to pay more for gold as well. I think that's for as a fundamental view a lot why we are seeing these gold prices, but it also can be a definition of how insecure market participants are actually. They seems like you could argue they don't want to be exposed like totally in stocks or crypto. They want to have a little bit of a secure asset, which of course traditionally is gold. I cannot believe that we are trading at 2,860, by the way. I haven't looked at gold for quite some time. And I remember, and this proves why I'm such a bad gold trader. I remember when we were trading at $2,000, I always said, like, I never would buy here. This would be a short for me.
I remember that. I think we talked about that as well. Like gold at 2,000, that's way too expensive. But it is interesting, very interesting that we're seeing this movement from gold, because I feel like it's we had USD strength and then we have gold strength. It feels.
It really feels like a lot of the moves we are seeing in traditional assets are based on US dollar strength also at the moment, which is weird because you would normally, not with gold, but with stocks, expect the moves like this to the upside when we see a weaker US dollar. So the classical risk-on move. Are you trading gold? I think I've never heard you talking about trading gold.
No, it's something that I sometimes... very rarely I find a good setup on gold, but the problem I have with gold is it usually stops me out. I usually get out on the wicks, and so most of the ideas I have on gold, they work out. I can determine the direction, but it usually stops me out and then goes to TP. It just has that volatility in both directions that is difficult for me to trade. Some people are really good at trading gold, but for me, not very good for me.
You gotta stick to the things you can do. I have a good friend who's a very successful oil trader. That guy really, it's mind blowing. He's like the oracle when it comes to, and not did I say gold? I meant oil. And he tried to teach me his system. Really, he went with me through it like every step at a time. And it's not complicated. I cannot earn money with it. I just cannot. There's something in that asset, that stops me from earning money. He always like teases me when he sees me. Said, "Hey, how are your oil trades going, Dirk?" I didn't do any, and it's so funny, The one trading system that works for you, not necessarily has to work for me, because we all look at different things. We all have a different approach when it comes to viewing assets, when it comes to risk management, when it comes to, also enduring volatility.
Yeah, no, I think definitely it's I've gone through many trading courses, and I know a couple of years ago, when I was still in the development phase, I went through many different trading courses and looked at many different YouTube videos to try to like find things that I could combine to create my own system. And I remember seeing some courses where it's like, sure, this might work, but it makes no sense to me. It makes no sense. I don't want to be trading this way.
Exactly. Yeah. Exactly. You don't want to be trading this way. Couldn't agree more. Yeah. And this is also why it's so beautiful. When I see like how Victor is, for example, approaching his trades, it's like super fascinating for me, because it's like so different from what I do. By the end of the day, it then all boils down, to support and resistance and supply and demand. But the way you can approach that can be so different and still work, the different ways.
Yeah, exactly. And I really, I enjoy, doing all these live streams with Victor. I've also seen that he, it took me a very long time to understand the way he trades, to really, because to me it made no sense. Like I looked at my trade, so I was taking the same trade that he was taking, but he wanted to enter almost where my stop loss were, and then that made no sense. I looked at that, I'm like, well, you want to enter here, but that completely invalidates my whole setup if price comes down here. And then he explained why, and now it makes a lot of sense the way he's trading. And then you kind of think like, I want to implement this into my own way of trading. Try to get pieces of what you like. You find these different pieces from different people, and you try to put them into your system. So with Victor's approach, I've adopted his way of doing risk management, for example. And by the way, guys, I wanted to show you, because I started building a lot of positions here when you were talking about US30 and gold. So I'm currently in 4 different positions now with small sizes. So I want to just bring that up and show you guys. So AD CAD, I entered this on AD CAD because I want to. So usually, what I'm looking for here is, clearly we have one big move down to the downside here, and then we have the breakout structure here, and price comes down into that 0.618 with that horizontal, and I'm then looking to trade this up to the 0.618 here. Now the thing is, it's just a small position to begin with, but as soon as I start to see a 4-hour trend potentially develop here, I will start adding to that position and start managing a little bit more. I also have a position here on.
Sorry, may I ask how? Because that is very interesting for me. How would you go by that? Like when you decide to add to the position, do you have like a final amount, risk amount in your head that you want to reach if you add, or is that like spontaneously decided by you?
No, so I have. So if I say, for example, okay, I'm gonna allocate 1% risk to this trade, and let's say I take that 1% risk, whatever that lot size would be, I divide it by 4, and I enter a fourth of the desired position here. And if it moves a little bit higher, I will double that position, and then I know I have 0.5% of risk left to allocate to this trade. But if I then move my stop loss up on the remainder, like the current open positions, if I move stops up, that means I'm freeing up some risk on the trade. So every risk that I'm removing from the trade, I'm adding it back with more confirmation. So even if I'm moving my stop loss up like this, I'm still going to lose some money if the stop loss gets hit, but I will be making a lot of money if my TP gets hit. So every time I move my stop up, I'm removing some risk from the trade, but I will take that risk and I will add it on more confirmation. So this 3R trade might turn into a 6 or 7R trade once it actually hits that TP. So on the trades that I do have strong conviction and I do see strong confirmation, I keep on adding risk, but making sure that the downside is limited, but the upside potential is very profitable. So a trade like this doesn't often hit TP, but when it does hit TP, it's probably going to be the most profitable trade of the year or something like that. Maybe I'll make 5 or 6% on one trade, and if I have two of those in a month, that means I might make 10 to 15% in a month, and that is
Insane.
Probably going to be, I'll have 1 or 2 months like that.
That's the gold medal in trading then.
Yeah, but it doesn't happen very often. But if I go back to my my trading results last year, so I made, I think 21% or something like that, and I made 19% of those 21 in November.
Yeah, yeah.
So I made
but
almost all
that
my
is kind of
profits in 1
normal,
month.
you know. It's like normally you have. I have a tendency also with that. Sorry, just very quickly, there was a question what the name of the orange indicator is. If from Dera, I think it was Dera Davi. So if you're referring to the one I showed just now on US 30 and on gold, this is the so-called bull market support band. So if you search for those on TradingView under indicators, it's freely available. And yeah, if you look at daily charts, if you are somebody following trends, highly recommended to use this one. The other one I was showing earlier is a proprietary indicator I'm using, which is I'm not making that one available because a lot of development time went into that. Welcome back, Victor.
Welcome back, Victor.
Thank you. Thank you. My audio is still okay, right?
Yeah, it's all good. I'm just going through some positions here that I have open. So this one, the first one is 80 CAD. The other one is NCD USD. So we can look at this on the weekly. This is just a level where I feel like if NCD USD is going to put in a bottom, then this is likely, I believe, where we're going to put in the bottom. What I like here as well is if we go to the daily. Now I have this trend line right here, so you can see how we have the perspective of. Just give me a second. We have the perspective of this downtrend right here, and then we kind of break above that trend line. We have what happened here? I can't remember. Yeah, the tariffs, right? So we had the tariffs right here, but I kind of see that price movement as a anomaly of it's a very macro news driven event, and it was something that doesn't usually happen. We had a very large gap, but if we go to the 3-day, it becomes clear what we have, the type of structure that I'm trading. We have a move down, a trend down, a low, a higher high, and I view this as a higher low. And the reason why I view this as a higher low, even though it's not a higher low, is because if you remove the price action, that is that gap. Basically, we had the gap from here down here, and we had a lot of selling pressure coming in, and we quickly reclaimed that price action on the next day. Then I view this as a move caused by potential cascading liquidations and panic in the market. But the true nature of the structure, I believe, is this. Like that. That's what I believe is the true nature. But just to be safe, I got the stop loss all the way down here. And the same thing is here. If this level is breached and we start to see something like this, then I will begin to add risk to this trade, because then this is, I believe, confirmed as the bottom. And then I have a position on Euro GBP as well. It's that break and retest of this level. It broke out of this area and then came down, big move up, big move down, using this level as support. So that's another trade. And then finally, we got this NCD CAD. And basically what we're seeing here on NCD CAD is a big range. And price wanted to get out of this area. And then we had, of course, the news and the tariffs coming out. We had a massive move to the downside, right inside into the reload zone right here, and it's a break of structure. So that's the positions I'm in right now with small risk, and I'm looking to add risk to these if we have a confirmation, basically. Another one I'm watching is, of course, Euro USD, but we could argue that we have a similar structure here. If we remove all of this, we could argue that, because this is actually technically a higher low, then we could argue that we do have, this move. but I want to be safe here, and I want to make sure that I enter on the reclaim of that level above. So we'll see. And I can't really enter more positions here because all of these 4 positions are basically very correlated with each other. We got 2 NCD positions, 2 CAD positions, and they're all very correlated, I believe, with the strength of the dollar. Yeah, that's my trades.
Looks like the W pattern you're looking for as well, no? I remember you talking about that a lot.
It does, but I feel it does. But this resistance is also very strong, and we also have this pattern. So there's definitely a couple of conflicting analysis, and yeah, I don't know.
Analysis.
Indication.
Yeah. Okay, last one I'm going to look at is USD because we have a question here. So USD I'm looking to short. I'm not sure when, and maybe I'll be too late, but this has to be after NFP, maybe even next week, and I might be late on that. This is on the weekly, but this is the range that I'm trading, and I went long USD here on this move. Now I'm looking to take this back down basically to range EQ. If you look at the daily, I view this as it's a little bit confusing now, but we have what we're seeing here is obviously very similar to what we had here. But I don't know. I had my entry up here and then I got stopped out. I still have a short position open. It's not viewed here because I got stopped out on Oenda, but I have it still open on 2 other accounts. But I'm not sure I want to, like, it's just a bit confusing. I'm not really getting a good read, but it does feel like it's going to break down and potentially go down to 0.88. But I don't know when and exactly what that's going to look like. So I'm staying out of this one. I like when it gets quiet.
No, I don't think it's quiet because we disagree with your trade there. I was actually parallel to this, looking at it as well. Yeah, but it looks like a nice double top there. No, so if you see a pull up now again to what is that 0.91, why not have another short there?
Guys, I actually have some things I need to take care of, so I'm gonna have to unfortunately leave you two to it, and I'll be back next week with you, Dirk. We're gonna be starting next week together.
Monday morning again.
Monday morning it is.
Nice.
All right.
NFPs out of the system.
Yeah. It's gonna be nice to analyze that.
I hate the NFP week really. It's like, but anyway, have a good one, Jonathan.
Yeah. Take care.
Indeed, Jonathan. Speedy recovery on your ankle, or a continuation of that recovery, I should say.
Yeah.
Take care. Enjoy your time.
Take care. Bye.
All right. I try to see or listen to you guys as I was on a break, but you were talking on the chart, but I didn't listen to everything. So were you guys on a specific chart before I came in?
Yeah, no, we were talking about a bit about the Dow Jones, US 30, and gold, which was a question from somebody in the audience. In terms of Forex, not really, just now what obviously Jonathan shared. Yeah.
I see.
So let's see. I was just about to ask you if you are seeing anything interesting. I think you're mainly looking at EU, no?
I am, yes. What I just mentioned, right? We have two opposing, and it's not uncommon, opposing structures, because what I see is, of how I think about price action, is that both sides are simultaneously building their case all the time, right? The buyers are creating structures or not. but they're still doing something, and the sellers as well, right? Buyers and sellers are constantly giving out signals by the structures, by the movement they do, things like that. And it just a matter of what time frame you're looking at, but you will find on both sides, some reason to buy or sell when price get to a certain level. And I've talked about I hope my alert doesn't sound for everyone, but
No,
it doesn't. That's a good thing. There is a reversal pattern on the H4 that we are reacting on the daily time frame, the daily structure as well, very nicely. So this move that we've had after that gap on Monday fits into that structure very, very well. That is the structure where you have a quasi on the 1 minute, which fits within the weekly as well. Now, but the thing is, the daily hasn't exactly, well, actually, it has by the creation. I stand corrected. What I was going to say was valid yesterday, but today already we did have a bullish engulfing. Right? That was the question yesterday I was asking. Just one bar doesn't mean anything, but now we have the engulfing created by yesterday's candle that confirms that reversal pattern. Doesn't mean it's going to, for sure reverse all the way and change direction, but the pattern is completed. The price is following the buy script, and that's my way of thinking about it, right? If price is doing this, right, doing the quasi, breaking the neckline, coming back to a relevant area of demand, and indicating that the buyers are getting back the control, it's a sequence. It's a sequence of price telling us something, and as long as it's following that sequence, it's likely that it's going to keep on following the sequence. The same as a trend, as long as the trend is intact, it's likely to continue in that direction, right? It's a play of words, of course, but that's the reality. The trend following is a thing. It makes us money for sure, and that's the same trend following logic that we apply to the trend. I apply to the sequence of price action, and by sequence I mean the pattern, of course. So the pattern is, as long as it is following the script of that pattern, I'm going to assume that it's going to keep on doing so. And the next target for that pattern on the daily time frame is this high. It's not about certainty because no one knows the future. I don't have a crystal ball. It doesn't work like that. But my probabilities of price reaching that level have increased because the price is following that script, right? Every step it makes in the script, it is increasing the probability that it eventually will happen, will reach that level. By the same token, I explained that we do have two structures on the H4, and that's a level lower, of course, in time frame. Two structures which are of interest, which is this one between the two horizontal lines and the one on top of that structure. The fact that we have a bearish quasi, while the daily is signaling bullish, doesn't mean necessarily that one is wrong. Although it could mean that we're going to continue to go up because daily is stronger, and maybe the H4 will not hold up. It's not strong against that daily power. But it could also mean that both of them can still be true, right? It can react to that structure on the H4 without invalidating, without breaking the whole setup on the daily, because they're different levels in terms of time frame hierarchy. So, but the higher probability trade is, of course, to follow the higher time frames. That's the hierarchy that we've been always taught, and that's for a reason. And what I'm trying to say is we have a area of interest where we're expecting for H4 not H4, for price to have bearish pressure coming in, but it's not happening. That was what I was saying before. But we did get an outside bar after the close about 50 minutes ago, which was probably caused by that news, that high impact news that we saw. It was bearish for EU, so it caused this H1 order block. So if the sell setup is going to be if it is valid, it means that the price action is trying and will succeed at a reversal, right? Because otherwise it cannot go down. If that is the case, then the next question is, what indication do we have in price action of an actual reversal? On the H4, there isn't anything else yet. There's that nice pin bar, but that's not something I typically use. That could be an indication that sellers are coming in by the looks of how large that wick is. If you go to the H2, it still looks bullish, right? If we go to the H1, we do have that outside bar right now. So
sorry, Victor, to interrupt you. I'll be back in 5 to 10 minutes. I quickly have to get to the mailman to pick up a parcel.
No problem. Take your time.
See you soon.
Bye-bye. So yes, let's see. All right, so I'm going to adjust this for a little bit for your. Let me get this straight so it doesn't. There you go. All right. It helps a little bit, I think. Okay, so what I was saying was that we do have the first indication on the hourlies on the lowest time frame possible, the H1, telling us that maybe, just maybe, the sellers are coming to the market, right? If they are, then we always have I don't remember what I was going to say in that phrase, but the test is this structure, this order block, newly fresh created, that's going to be the question, the test for the market. If it isn't able to break it, obviously that means that it had a bearish reaction to it. Obviously that would be a sign, that another sign that bearishness is coming to the market, and that could be the sign of going short. Remember that the daily is signaling us, so it's not something you want to be trading for a very long time. You don't want to be holding this for very long, because the daily is bullish, is signaling it is likely to, in the next couple of days, end up being higher. Not necessarily in a straight line. It might still go down first, but who knows how low that is going to be. That's very difficult. The strongest indication you have to hold on is that we have a daily bullish signal, and in the next couple of sessions, you have a higher probability of price ending up higher than lower. In between, it's a little bit difficult to know where price is going to go, at least based on the daily. But on the H4, we do have not the H4, the H1. We do have one structure. It's a minute structure. H1 isn't that strong yet, but it is something. So we can go to the lower time frames and see if indeed it is playing along with that sell script, right? One of the structures that it had opportunities on the 2 minute was below us, right? We have it on the 2 minute. We did have an entry order block, but as you can see, at least let's go to the 2 minute. It didn't respect. It didn't flinch, right? So the market, there was no reason for us to take that short there, because nothing indicates that the market wants to go there, wants to react from it. It didn't confirm at all. So we can take that away and come back to, let's say, the 5 minute, and you can see here we have two areas, right? We have the 5 minute here. It's quite wide for my liking, but it is what it is. And we have a 3 minute here, and also a 1 minute, if I'm not mistaken. Yes, we have a, no, it's not a 1 minute. I think it is a 3 minute. Yeah, it is a 3 minute there. You can't see it because it's so tight. But we have three structures on two different time frames that might be the test for price if it's going to reverse from this area or not. And these are low probability entries in the sense that the win rate isn't that high, right? It's especially if you're trying to get in on a bigger move using a smaller time frame. Obviously, you're going to have a lower than 50% win rate. But if the price is going to reverse, these are the probable places. Do you have a high probability that the price will reverse after interacting with those two structures, one of those two structures, right? So it's a little tricky in terms of probability when you think about it. It's not a high probability entry necessarily, but if price is going to reverse, and that's the caveat, if it is going to reverse, it's high probability that it's going to use one of those two structures. So what you can do is lower your risk. That's what I do, and only enter after the market does some confirms in some way that is valid to you, that after it you know interacts with these order blocks on the 5 minute and on the 3 minute, that it wants to reverse. That's it. There's nothing really more to it that you can do. It's just wait for price to tell you that it wants. It looks very bullish, by the way, right? The neckline was borderline. It wasn't actually taken out. It was matched, right? So the low on that swing low is equal to this low, which is, depending on your rules on the quasi, may or may not be a valid quasi. I do consider it to be a quasi, even if it didn't take it out by exceeding, going lower in price. But that's a preference, a person preference. Based on the data that I have collected, it's okay to take those as well. So I do take them. So that is I think that is the thing for today. Other than that, I don't see any opportunities on GU or EU. This is probably, I don't know if for the rest of the day, but this is the area that I'm going to be looking at for at least during our live stream, to get, if price gets much higher and breaks it out, the setup is then invalidated, meaning that this was not or is not going to be the head of the reversal, or maybe there's not going to be a reversal. And I would be looking for a possible, perhaps this is then the left shoulder. That would be the left shoulder, and a possible head might be formed after it breaks and takes out that left shoulder, or that now it's a head, but then it would be a left shoulder. And see if we can get the quasi formed. So there's a couple of things it has to do before I get interested, if it doesn't signal right away. But that's the the analysis and that's the trade I'm looking to take if if it presents itself the way that I would expect. Let me check the chat to see if we have anything in particular. Let's look at the chat. Remember, guys, if you like our stream, you appreciate the content we bring to you, forget not to like us. Hit that button. It means a lot to us. It will signal to us that we are doing something right, and it will also signal to the algorithms that we are indeed doing. We are indeed making the good choices. Let's see. We have all right. I'm checking the chat. All right. Let's see. All right. Perfect. Hamid has a question about the scheduling. If we will always have earlier live, or if this is something out of the ordinary. Hamid, we have, as you have noticed, we have extended our trading, our streaming hours, and there is a schedule, and we will make sure that that schedule is in Discord for everyone to follow along as we are, progressing through the day. All right, Dirk, could you take over a couple of? Can I put you on, by the way, to begin with? Okay. I'll be right back. Is that okay?
Yeah, no problem. Of course, yeah.
I will put your screen in case you want to explain.
Yeah, sure, yeah. All right. So I didn't listen just now because, as I said, I was attending to the mailman because I was expecting a parcel, what Victor was talking about. So I hope I'm not repeating anything that has been said here already. I actually meant to ask Victor if his zone of resistance on the daily is the same that I have here around 105. Gotta ask him that when he's back just now. So let's look here a little bit at euro dollar intraday. Let me quickly delete these drawings here. So yeah, we are really in the middle. There was a little bit of a chance when we were down here. So this exclamation mark here, maybe you can see that one here from my, I'm not calling it a trading system. It's more like, for me, like a warning system, like triggering, like, hey, we have reached a price level. It's worth looking at. Look for, confirmation or price action down there. That was a good indication that price would go higher again. But right now we are here kind of in the middle again. And this is also a bit the story of a day, in my opinion. Like, the people are kind of waiting, market participants, for the results of a non-farm payrolls. So I wouldn't be surprised if we also do not see that much action anymore until Friday. We have ISM coming out here in half an hour. What do we have tomorrow? This one is, of course, interesting if you are trading, for example, pound sterling against other currencies. Let's have a quick look. But usually, not really here. What you'll usually see is that pretty much the moves that we see on euro dollar is the same like in cable, but we are reaching here potentially actually an interesting area right now. So what I would do now, I would like to see exactly here, or almost exactly at this lower brown line, either from one of my indicators, a buy signal. Even better would be like a combination, like the exclamation mark, or sometimes I get something here which I call a bottom signal, something like this. That would be potentially a good trade, although we have to see here like the volatility. We see a volatility squeeze here as well, so you don't have a lot of area where the price can currently move. So downside here at 125.12 at the moment, upside already at 125.50. So if I have to decide, it's like not the kind of setting really where I like to trade trades at the moment. And this is why I said earlier also, I'm happy when the non-farm payrolls are out of our system for this week, because it's influencing everything so heavily this week. It's like everybody is looking for that. Everybody is waiting for the numbers to be published there. And I am looking forward next week when we can go return to some more normal action. But what do we have next week? Actually, next week we have inflation rating coming out, and that's going to be biggie as well. We have Jerome Powell holding a speech here on Wednesday, so this is going to be biggie as well. And that's kind of a thing, at the moment, the market participants, and not only, by the way, us retail traders, so-called retail traders, I don't like the word very much, but also the traders that sit at banks, so the more institutional, they are very focused at the moment at these economic news, especially inflation, especially everything that has to that is related to the job market, unemployment, non-farm payrolls, the JOLTS job openings that we saw published yesterday, because everybody is waiting, for a signal that the Fed is going to further cut interest rates, which probably is not going to happen as fast as we would expect. However, if we really see here on Friday, and the indication for that is here the JOLT job openings we saw yesterday, which came in a little bit weaker than expected. So my kind of game plan for Friday is to maybe not trade, but have in the back of my hand that the non-farm payrolls could also be a little bit disappointing. So maybe something more around 150 versus the expectation of 170,000 newly created jobs outside of agriculture. And this would actually be good for the market. This would be a good move. So you could expect then for sure stocks trending high again, so an upward push here in the Dow Jones or S&P 500, maybe a structure really that pushes us also above the finally, into a continuation pattern of what we saw on the stock market so far. Welcome back. That was very fast, man.
Yes, I'm still pending, so I may need to take a little break in a couple of minutes. But
I was just talking
I'm
about, that like this week for me, it feels a little bit like, I'm waiting to get the non-farm payrolls out of our system. And then I just saw that actually next week we have inflation data also coming in. So I don't think next week is going to be any better. Wednesday, we are waiting inflation data. Ideal for me would be if we see like lower than expected non-farm payrolls. I just said, I wouldn't be surprised to see something like around 150,000 newly created jobs, because the JOLTS job openings came in weaker. That would for sure be something, to push the stock markets out of this range, out of this double topish structure that I was talking about earlier, and give us a sense of direction. But with inflation then coming in next week, Wednesday, it's probably going to be the same like we are seeing right now. People are going to wait for that. And not only us, retail traders, especially talking here about institutional traders as well, who don't want like a lot of exposure. Those guys are not betting on the outcome, of an economic release. They are like us, sitting here on the sidelines, trade a little bit if they really see something, not with maybe the position size that we usually would be trading, a little bit more cautious. But other than that, everybody is just happy. I think if we get those two numbers out of the system, and then finally the rest of February, can be a normal price discovery again without economic releases screwing up everything too much.
Yeah, I think you're so right. We as trader, because we don't depend and we're not actually taking a position because of the outcome we think those events have, we're not interested in those events necessarily. Actually, although I know that sometimes it takes one of those numbers to surprise the market for it to go to the extremes, for me then to come in and capture those great entries. Once I'm in the trade, and I also know that once I'm in the trade, sometimes it is those news that will be the catalyst that push me towards my TP. Same thing. I don't like being too close either in time or in level when the news comes out, because it's such a 50-50 to me.
Yeah,
I don't think I have an edge at all. Predicting what direction it's going to be, if it's going to surprise or not. I really don't know. And
it's always a roll of dice there, really. Sometimes you get lucky.
Is.
More often you're on the wrong side somehow, at least from my experience. So I tend to stay out of the market as well, especially since like on the lower time frames, I work with a lot of my proprietary indicators there. And everything is, basically measured in price. It's just another way of displaying price in indicator. Price and volume is usually what you have as data inputs. And you want to wait a little bit until things normalize again, until the volatility, until you get rid of a spike. So I tend to not listen too much if I get signals from these indicators as well, and rather wait like for an hour or something until the markets move more normally again.
That is indeed. I recognize that thought or that way of thinking and approaching high impact news. Coming back to the price action of EU, I just gave my idea of a possible short coming in based on that quasi that is borderline quasi, but to me it's still valid. The question is, are we seeing? Let me see. That's not the line that I should be drawing. We want to seeing price, the sellers stay control within this area, right? Not necessarily that this can be longer in time. Doesn't necessarily have to be limited by that box in terms of time, but it is these two areas. That's the order block. We need price action needs to confirm to us that the sellers are coming to the market, and they have already tapped into the area, so they have complied with that criteria. Now it's up to the price. Is price going to reverse from that area, making bearish wicks, bearish engulfings, pin bars, and bearish structures, whatever it is that you need to read price. For example, more of those bars. I know it's just one bar. Big bodies to the downside. That could be another direction as well, another indication as well, that the sellers are taking control. And try not to have any expectation as to which, if it is or isn't going to show us that, because if you have any kind of expectation, you become a little bit invested in one thing or the other, and that we shouldn't be invested in either one of happening. We should be as objective as possible. Is it or isn't the sellers taking control? And you can use different time frames, you can use different things, different indicators. It's up to you. It doesn't matter. There's not a right or wrong thing, as long as it tells you that the sellers are taking control of it. If they do, they're doing it after forming a quasi on the 5-minute within a H1 structure that has a probability higher than usual of price going selling pressure coming to the market within an H4. So everything lines up, and that's the definition of a good setup. So we'll have to see if it triggers or not, and that trigger can be different for every person, right? You don't have to trade the same way we do. Actually, I advise everyone to not trade like I do, like exactly the way I do. Perhaps take the concepts, the approach, but make it your own.
Yeah, absolutely agree. You have to find your own way of looking at the markets. That's actually also the reason why I shared the story earlier when it comes to trading in oil, where I tried to trade exactly with the system my friend is trading, and I utterly failed. It shows like we are all different. We can incorporate, of course, things like that other successful traders do. This is also why I'm so interested and why I'm like to ask questions to Jonathan, to Victor, to Alex, because I see they are successful. So I always want to see, are there elements that I can incorporate into my own trading style? Which actually brings me to a question for you, Victor. I hope you don't mind in asking. I hear you talking a lot about quasis. What is that, a quasi?
That's a very, very good question. I hope I am able to.
I mean, if you don't mind sharing, that is, of course. No, I don't want to force you here.
No problem. I talk about quasi with pleasure, so don't worry at all. A quasi is, and I gladly talk about it as much as necessary. If anyone asks me, I would be explaining it again and again. in time, because the people in the audience, they keep changing all the time. So we may explain it thinking, I already explained it, but of course the audience, the composition in the audience is a dynamic thing. All right, so it's very, very, very simple. A quasi is a reversal pattern, which is a variant of the head and shoulder. The head and shoulder, which is very used for by traders all around the world, from all times, from all ages, which is a very effective reversal pattern, which is you have to have for a head and shoulder, and that also holds true. Actually, could you take over a little while,
Yeah,
Dirk?
sure.
I'll be right back. I'll put
Yeah, of course.
your
No problem.
screen on.
Okay. So Victor is keeping the tension up here a little bit for us. And I don't know, you guys in the audience who are here very frequently, maybe you can write into the chat what you think a quasi is. I'm looking forward to the explanation, because it's really genuinely a question that I have. I'm very fascinated with the trading style of Victor, and if there's like one thing that I've learned in the past 26 years that I'm doing this already, is like, you always have to continue on the path of learning. You can never stop. Markets are constantly changing. I cannot explain how many different trading styles and trading systems I've used over the past 26 years. Everything works for a while until it stops working. One thing universally that is always true, that has been always true over at least the 26 years that I'm doing this, are concepts of support and resistance. And you might draw your own lines. You can use this indicator here I'm using. I said earlier, it's called here dynamic support and resistance zones by Chart Prime. Does the same thing like you manually drawing on the chart. It's just, for me, being a little bit lazy here, but it always boils down to either support or resistance, to where do supply and demand meet. And my strategy is there always to wait, until we reach an area where there is a good area of support, until we reach an area where there's a good resistance here. Ideally, of course, you want to have something like this down here, but I mean, let's be realistic. That's at 4,000 points, so that's a major crash already. And so, but the thing is, what I like to do then is, and I that probably doesn't differ very much from what Victor is doing, is then I like to go down to the time frame. So, for example, from the daily to the 4 hour, from the daily to the 1 hour, and even further down, to see if price action kind of can confirm that removal, that can confirm the turnaround there. So, if we, for example, look here, and I just said it here on GBP US dollar. Now I haven't looked here at we can have a look first here at the daily time frame, for example. Yeah, that wouldn't be so. Typically here we can actually have a look here at this one. So the last bottom signal we got here on the 14th of January, where my trading system said, well, according to the data that's available to me, to the system, this should be pretty much the bottom, local bottom within this short-term downtrend that we are seeing. And ideally, I would like to have backup here through other signals. For example, here the buy signals, which are from another proprietary indicator, or sometimes I get the opposite of these here. So instead of high signals, low signals. That would be really a good signal for me if I see levels of confluence here, meaning a bottom signal, buy signal, maybe a local low. So that would be typically a trade I'm looking for. Now, what I would do here is, then I'm looking at Heikin Ashi charts here at the moment, of course, but I would switch back to normal candlestick charts, and then I would go down the time frames, just as Victor, is doing this as well, to see, can I find levels in price action also at the same time. Here in the 4 hour, well, we see a double bottom, obviously, as well, but it's more of an inside bar, so nothing really. We could go down to the 1 hour then, like Victor earlier said, to kind of give us allow us to go down the time frame. That's also not really something in this case, but you can see here on the 1 hour, for example, that we also had 2 buy signals there in addition to this green zone here, this green markings. So this one here, you can see it turns green, which is always displayed once price tends to react too much to one side. So if it tends to react too much to the downside, we would see here a green area. If it tends to react too much to the upside, which last time here was the case there, you would see a red area. And you want to have everything aligned. So you want to have buy signals, exclamation marks, bottom signals from those indicators, all aligned first. You don't just want, one thing to happen. It needs to be aligned by the end of the day. And sorry. And this is what happened here the last time. It's not a trade I took, I have to say here. But that was a pretty good signal. However, on the daily, I would like to have seen more confluence for a signal like this. And yeah, when Victor, for example, looks for price action there, so for his outside bars, for typically what is a bullish engulfing pattern, probably for something like a pin bar, which, kind of looks like a nail being pushed into the ground. And you gotta be a little bit patient there. And I think really this is the key, to really look for the high quality signals. That is, for example, what Jonathan was talking about earlier, to be patient and maybe even go as far to look for this one trade a month, where you say, this is like all the stars lining up. This is the trade I want to take. And if you're new to trading, this is actually what I really, really would like you to do, because it's welcome back, Victor, because it gives you a lot of confidence if you do that for half year, if you do that for 1 year, to be really, really picky and maybe start with the daily charts, maybe start with the 4-hour charts, instead of trying to find your entries on the 2 minutes or 1 minute charts even. I think this is going to give you a lot of confidence boost. It's like one of my mentors back then from a bank told me once, Dirk, start with the daily charts and then you can work your way down. And this kind of stuck with me over the years, because I thought, like, okay, in order to be able to trade the 4-hour charts, 1 hour charts, 50 minutes, 5 minutes, 1 minute, you gotta be successful on the higher time frames. I just told the audience to share with us their definition of what a quasi is, and we got some answers. Are they right? Are they wrong?
Yes.
I'm super nosy.
Let me check the chat. I see Harish says, what does Harish says? I saw something right here. What was it?
Quasi is the love of Victor.
Yes, Quasi is the love of Victor, and I think he's not very far from the truth. Let's see, what else do we have? We have Harish also saying Quasi is a variant of the head and shoulder, but it's a little different. That's both of them are correct. Going back to the let's look at the price action. Maybe I should put my screen on, of course, because otherwise no one will see what I would be seeing, what I would be explaining. Let's look at the setup. As you can see, we are getting the expected move, right? We did get that reversal in terms of, that reaction. But the question is, are the sellers actually taking control? Yes or no? Right? And here it comes a bit. You have to have a definition for yourself. When do you, and have a clear definition, objective one, because when it gets to the point of pulling the trigger, you need to be completely convinced that it is meeting your criteria. And one way to do it is not to let it depend on your feeling, on your greed, on your fear, or any of that. No. just have a rule. I need to see this in combination with this or not, and then for me, I will accept that. I will conclude that I may be wrong or right, doesn't matter, but I will conclude that the sellers have begun taking control. And once you have such an objective confirmation or rule or criteria, how you want to call it, you just act upon it and you let go of the trade. It's no longer in your ability. There's nothing else you can do. Your system signaled, and probability will take care of whatever outcome that will come. Right. So we did get we did get that reaction from it, but is it? And I will leave it in the middle. I'll not tell you it has or it hasn't. We don't have enough information, and I don't want to say too much. Maybe afterwards I can tell you. Maybe it's a little exercise. If do you think the sellers to control, have they or have they not in this area so far, as they are interacting with that order block on the 5 minute? All right, so let's go back to what a quasi is. I was in the middle of it. My apologies for that interruption, but as this is live, these sometimes, when you're doing live, that kind of things may happen. All right, so Hamed has very funny today, Hamed. Victosi Modo.
Nice one. Hey, that's like the honoring badge as a trader when you get a trading pattern named after you.
Wow, that would be. I don't think I deserve a pattern to be named after my name. Not at all. But the Quasimodo it's a reversal pattern. It's a variant of the head and shoulder. And if you're completely new to trading, you may not what a head and shoulder is, although I think everyone even at the beginning, you probably have some exposure to what a head and shoulder. You'll see it, in whenever you open any book, textbook, or website, or any picture of any kind of patterns. Head and shoulder is definitely one of them that they will be showing you. One of the classical patterns is the head and shoulder, and the head and shoulder for the first thing you need to know. Actually, let me do it the other way around. The head and shoulder is, I was going to paint the inverse head and shoulder. You have a established uptrend in this case, where you have a higher high. This is the higher than the previous high, so it's the higher high, and you have a higher low, an established uptrend, and then you have a highest point, which is the head. Those are the shoulders, and roughly in textbooks you will tend to see them, symmetrical, where you have two lower highs on each side of that one peak. Right, that's where they call it head and shoulder. This is the head, the left shoulder, and the right shoulder. This pattern indicates a reversal. That's it. And normally, textbook, they would calculate let me see. They will take the area. That's not the right tool. They will, when price breaks down, this is the classical head and shoulder. This is not a quasi. When the pattern completes, when after the right shoulder is created, and the mark and the neckline, which is at the basis of these two shoulders, when that neckline breaks down, right? When price breaks out of it, that's the head and shoulder. And you typically take the entry here, and there were different ways to trade the head and shoulder. Let me I'm doing a little bit of an extended explanation, but let me see if I can get it. Oh, some reason I'm all right. There you go. So you get into the trade, and you may have different, the exactly where you put your stop depends a little bit about the the way you want to be trading, but you want to be doing it above the last high, which is the right shoulder, above the whole structure, depends on your risk reward ratio. And typically, textbook information would be that you'd be aiming for this distance, the head, the structure. You would be using for your targets, right? So in this case, it's 260. So you target the same amount for the distance. So 260, you target 260 below, and you'd be targeting. I didn't measure it exactly, but basically that's roughly the idea. This is the head and shoulder classical reversal pattern. Works well. Very used, very effective. However, the quasi is a variance, as I said, of the head and shoulder. The head and shoulder is symmetrical, although in reality it's not perfectly symmetrical. It's not going to be like that, because there are fluctuations and increases in ranges, in volatility, and so forth. But the difference with the quasi and the head and shoulder is that it is asymmetrical, meaning the bases of the two shoulders are not symmetrical in the bases as well as in the top, right? It can have this is a quasi. It can be even something like this. That's also a quasi. The point is, and that's the beauty of it, that you have to once it breaks the neckline, you already have the quasi, right? So let's say this is the structure you have. This is, to me, it doesn't have the right shoulder yet, but to me, this is already an activated quasi, meaning it broke the neckline. I'm going to assume it is trying to make or form that right shoulder. So what I do is I try to catch the creation or the point where the right shoulder is going to be, right? I don't know where it is going to be. I don't pretend to know where it is going to be, but I try to look for indications in price action as to what is likely to be the right shoulder. Where is it going to be put? And I use different concepts for that, but mostly order blocks and quasis in different time frames. And so once and this is the area that I try to catch, right? The reversal on the lower time frame where the supposedly the right shoulder is going to be created. And if I am right, go ahead.
So for the right shoulder, like the indication would be that you are looking also for confirming price action. In this case, like a bearish engulfing pattern or bearish outside bar or something like this.
Yeah, something it doesn't, and that you can fill that in what exactly you want to be using, but something that has validity in indicating that the sellers are, in this case, the sellers are taking over. Then I would go to the lower time frames and have something. Let me see. I don't know if this is the 5 minutes, so maybe I should take something like that. It's not about don't look at the 15M,
yeah.
But in that area, I'm trying to look for indications. And what those indications are, anyone can fill them in, whatever that indicates to you that there's a reversal happening within that small little box. And if you're right, you're actually getting a reversal within a bigger reversal. And the leg that I'm trying to catch is, of course, this leg. So basically, my entry would be as close as possible to the top of that that right shoulder, and I'm targeting different parts, but usually the last part of that structure. And since my idea is that this is the reason, right? That's the assumption I have. This is the reason price is reversing at this, is printing that right shoulder. I don't need necessarily to have my stop all the way above. You can, right? Sometimes it makes sense, but you could just choose to just have that structure as the stop loss. If it invalidates that entry, then the whole setup isn't invalidated, but the entry is. So, and that's
a very attractive risk reward ratio then also. I mean, you can afford then only being correct with this, like, just a handful of times and still earn money with it because your risk reward ratio on this one is so crazy good.
Yes, but that it comes with a caveat. It's not above 50%. It's actually much lower, obviously, because your stop loss is very tight. So
Obviously, yeah.
in the degree that everything you do allows you to select only the very best entries, in the degree you're successful in doing that, that it will decide whether or not this risk reward ratio, although it sounds and it looks very attractive, um, the degree that you're able to identify the structures, the proper structures that increase your probabilities, that will decide if this way of trading is profitable for you or not. So it's still, even though it has a very attractive risk reward ratio, if you don't select your trades well enough, it may not be as profitable or not even be profitable for you at all.
Can be also very, very hard, like maybe for a lot of people, to accept the fact my success rate is going to be at, I don't know, 40% or 35%. And I'm still going to earn money with it. I'm still going to earn much more money probably than other traders out there. But, I have to live with being more wrong than right. But if I'm right, it's going to pay off handsomely.
Exactly. It's on the mind, on the psychology, on the mindset. It's very hard for, I think, the majority of traders, because you are wrong more often than you are right. And we have news coming out. I think
ISM,
it was ISM service PMI. The PMI on
PMI, ISM services PMI came in a little bit weaker than expected.
And the
wow.
That's the reaction. Of course, this is the 5-minute. It hasn't been invalidated, but it hasn't been invalidated, the structure yet, the order block. We'll have to wait 5 minutes for that to close. But it's clearly that the news this week, the order block, but at trading, I mentioned this at the beginning of today's stream. When you have news coming up so close to your entry, there's a lot of risk, because your stop loss, if you understand that my stop loss would be somewhere above that structure, you can understand that I only have about 8 pips, maybe 10 if I'm a little bit cautious. That's not enough for high impact news. That's not something recommendable, because it can easily surprise and gap 10-20 pips on high, depending on the type of high impact news, of course. So that's not something you want to, in a position you want to be in. But that's the Quasi. So I apply it all the time, and the regulars in our show will know inside out of the Quasi, of course, and I hope they do, because it's very effective for their trading.
Thank you for the explanation. It's like I heard you talking about this so often, so I wondered, like, oh, what is that? It must be like an essential part of what he's doing, and now I can see why. So thank you. I'm going to be on the lookout for Quasis now as well, then, to get an eye for that.
Yes, and one thing I didn't mention, Quasi is short for Quasimodo.
I figured that, because it has an odd shape.
Exactly, it's an atypical or asymmetrical shape, like the fictional character in that novel. All right, so we are at sadly, we are at the end of our stream. It's Wednesday, and it is the unfortunate time that we need to close our stream. I'm very happy with how this week has gone. We have expanded our hours to the delight of our audience. We've had good responses from people in the audience, that they like us, like the fact that we have expanded the hours. There's more chance for you to participate. If you're between the earlier hours where you were not available, now you have more chance to pick, have a chance to have some exposure to traders, profitable traders, experienced traders that are focused in delivering actionable concepts to you, so that you can be profitable. Dirk, I am very grateful for you today.
Likewise, my friend. I learned a lot again.
All right. So, if do you have any closing comments?
Yeah, be careful, guys. Remember, we still have the NFP coming in on Friday, so expect a little bit of weird market moves, maybe as we get closer to those. So, especially on Friday, I'm probably going to be a lot on the lookout. Tomorrow, we could see some interesting moves. Often, the day before the NFPs are days where you see a lot of price action. So I'm going to be focused on that tomorrow. Other than that, looking forward to seeing you guys again next week. When saying you guys, of course, I mean our dear audience. And of course, you also, Victor. Take care, everybody, and bye-bye.
All right. See you guys next week. Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.